All right. Hello, everybody. Welcome back to another episode of the Market Close. It's like we haven't talked all day, but we are here. And we are getting into a bunch of things that we got to talk about. One of them being earnings previews for the day. We're going to get into that. And we've got a bunch of earnings to talk about. On top of that, obviously, a lot of you are coming from the Fed stream. We just watched the Fed. We just watched J-Powell. And J-Powell said J-Powell things. The big thing that J-Powell said was that, hey, if we get the right data, we are probably going to initiate that rate cut. Didn't literally say that, but you could tell that was what was being implied. Markets pumped on that. Markets are now selling off a little bit because they are probably afraid about what Meta is going to say. But nonetheless, it was what we needed J-Powell to say, and thankfully he said that. So we have the indication that rate cuts are probably going to happen in September. Okay, so a couple pieces of news. Number one, Bill Ackman just pulled his IPO. I don't know if you guys saw this, but this news broke 20 minutes ago. I think this is very healthy. Bill Ackman wanted to take Pershing Square public, which was like part of his investment fund. I think it's very healthy that this did not go live. The reason he's pulling his IPO is because he's not seeing as much demand. That is a good thing. He wanted to raise $2 billion from retail. Quite frankly, if Bill Ackman ended up raising $2 billion from retail, I would be very scared about the state of the public markets. Maybe there would be too much liquidity in the system, and that much liquidity in the system willing to buy Bill Ackman's investment fund, which, by the way, it's just Google, Chipotle, and Hilton mixed together. That's all it really is. Like you could buy, a couple stocks on your own. You don't have to go through Bill Ackman to get it. I actually think it's very healthy. We did not see this company IPO. And quite frankly, if there wasn't enough demand, that means that there's not that much liquidity in the system, which is a good thing because that means that liquidity is going to go to the companies that are actually performing and that are actually putting up the results. So that's what you have in the context of Bill Ackman. Again, he does have a big retail following. I know a lot of people like him. A lot of people also don't like him. But at the end of the day, the people that did like him, given his legacy and his career, they probably would have dabbled into buying a fund. I'm happy to see that thing doesn't even go public because you just don't want that type of an IPO. It's not an AI thing, nothing new. It's like not creating anything innovative. It's just an investment fund. You don't want that sucking up liquidity in the system. Robinhood right here, $20.67, up 1.35%. PayPal, 65.83. SoFi, 760. S&P at 550. Meta at 473. So we've got Meta earnings now that we need to discuss. The street is expecting 60% year-over-year growth for Meta. EPS of $4.78. And then the street is expecting revenue growth of 19.7%, $38.3 billion, almost 95% of that revenue is from advertising. So we're going to see what the street ends up saying, or what Meta ends up saying, but that's at least what the street's looking for. And I guess we'll see how they report in about 15 minutes. I think Meta reports immediately like Microsoft. I don't think they wait till 4:05. So we're going to see a move, I think, pretty quickly. So let's make the watch list. We've got Meta on deck. Let me know if any of you own these stocks. We got Qualcomm on deck. We have Enovix on deck. We have Etsy, big consumer company, on deck. We have ARM on deck. So those are the 5 big ones. And then what else do we have? I'm sure we have a couple other names. Let me pull them up. But Meta is going to be the one that we're looking at the most. Oh, Carvana and Teladoc. Let's do Carvana and Teladoc. So CVNA. Carvana's up triple digits year to date. And then TDOC is... Kathy's been selling the crap out of TDOC, by the way. TDOC's down 2%. She's been selling like millions of shares over the past 3 weeks. And those are the main ones. Oh, Lamb Research. That's another semis place. Let's do that one. Lamb Research. Okay, cool. So those are the big names that we're looking at after the bell, and we're going to see what ends up happening. Obese Tomato, thank you for the $5 super chat. I hope Amazon, Apple, and Meta beat. Sentiment seems to be changing, and a miss could bring us right back to fear. So I think Meta is going to beat, but I think Meta is going to spend on CapEx, and the street might tank them, just like they tanked Microsoft. I don't want to say Meta goes up 10% because every trend we've seen looks like Meta is going to increase CapEx, so street's going to get upset, and then they're going to need an earnings call to kind of get through it. However, if Meta beats definitively on EPS and revenue, which I think they have a good chance to, just given what I looked at in their June engagement on Instagram, they might end up having a hell of a quarter. And if that's the case, that might overcompensate for the increased CapEx spend, which means Meta maybe doesn't have that kind of nasty fall that Microsoft and Google have before they come back to normal. Amazon and Apple we'll see as well tomorrow and see what goes from there. Benny says, just placed a buy order at 400 for Meta, given what happened last earnings. Yeah, I mean, let's see. You're going to have to be quick if it dips. But if the dip also is continuing to dip, then being quick doesn't matter because, you'll end up having a chance to buy at much lower levels than here. I wouldn't be more worried about Meta. Zucks has never looked more human or relaxed. So, I agree with the sentiment. Zuck definitely, he feels relaxed, but I don't know. I don't know at this point how much that much is an indication, because I thought Noto also was super relaxed before earnings 2 quarters ago. Now, I know SoFi is different than Meta, but I don't know. I don't know if Zuck's being this chill and wearing his gold chain is enough of an indicator. I mean, Zuck's was surfing last time in some really cool picture before the Q1 earnings, and then we tanked to 395, right? So, and I remember posting that picture, and I was like, there's no way Zuck's misses earnings, right? And then they didn't miss, but they still tanked. So I don't know. I have no prediction on this. I have no play on this. Obviously, I want them to do well. That would help the market, but I just have no clue what Meta is gonna show. Thoughts on the Iran-Israel tension build up impact on the market soon. So Israel eliminated the leader of Hamas. I know we didn't talk about it too much over the past couple of days because we've had a lot of news, but that happened last night. So we didn't talk about it in the market open. That's a big deal. And if you are on the side of Israel and if you are against Hamas, that is a successful elimination. I think the United States is very happy that Israel conducted that. However, the dude was not in Palestine, where Hamas is. He was in Tehran, which is in Iran. So he was in a place where he thought he wasn't going to be found, and then the IDF found him and they eliminated him. This is a guy who they've been trying to get for the past 20 years. So I don't know the implications of this, because Iran did just say they are planning a retaliatory attack. Maybe that's also why the market's dipping a little bit. The S&P was at 553. Now it's at 549. Maybe that's the reason. To an extent, given that we just fell in the past 20 minutes, and that's when the news broke. But I don't know if it's I don't know if it's going to be that intense like it was in April, where you really felt like you were about to have a full blown war. I guess we got to get more information on it. But so far, Israel did claim victory for assassinating the leader, one of the most senior leaders of Hamas, while he was in Iran. And now the question is going to be: is there actually a retaliatory strike? Are you buying more Hood calls at this level? Yeah, I bought 2 more today. Look, ultimately, I think Hood is going to have a good earnings. I do agree with Chris that if you're in any options, it makes sense to potentially begin to scale out if you think there's a black swan event, if you think things are going to get a little choppy in August, etc. But I would wait until Hood earnings before I think of trimming some of my position, because I think they're going to crush on earnings. And on top of that, Hood earnings gets us closer into the middle of August, and then we have Bitcoin. A lot of the people that at least I'm paying attention to that are a bit smarter than me when it comes to Bitcoin are thinking that late August is when you start to see more of the liquidity heat up and Bitcoin starts to run. Hood is obviously a very good proxy for Bitcoin, on top of the rate cut coming in September that it seems like is confirmed. Bitcoin tanking right now, down 1.6%. So I think we got to wait till Hood earnings to necessarily get out of the position. Now, maybe Hood tanks on earnings. I have no clue. I'm taking a risk there. I'm pretty bullish that they're going to have a pretty exceptional earnings, but the market could be irrational, right? And so we'll end up seeing what happens there. Again, if the entire market dips, everything goes to shit. And if everything goes to shit, then, you're just going to be in a position where you're going to have to navigate how that plays out. But we'll see after earnings when it comes to Robnet. And obviously we'll see what happens with Bitcoin as well. Bitcoin 65,000, IWM still up on the day, but you've got some big red candles from 228. So giving up most of their gains, kind of expected. This is what happens every time. I think the market's now getting ready for Meta. That's up 2%. And I guess we're going to see how it plays out for Meta. Let's do price predictions for Meta. Where do you think price goes for Meta? Put it in the chat. Whoever gets the exact price closing at 8 p.m., we will do $25 Amazon gift card if you get the exact price. So put in your estimates, and if you get the exact price and at 8 p.m. it's the exact price, just screenshot it, DM me on Twitter. Try to be specific. Try to have like 479.34, right? Try to get, and we'll try to get the person who's as specific as possible. And you don't have to literally be specific for the gift card, but we'll try to get it to someone who's as specific as possible. So yeah, put that in the chat. Put that in the chat. 8 p.m. closing. That'll be the price we use. So not Robinhood overnight. We'll use 8 p.m. closing on regular exchanges. All right. So we got BSOV at 418.69. I see what you did there with the last two digits. We've got Gabe at 502.59. 449.62. Most of you are bearish. I'm not getting a lot of 500s in the chat. I'm getting more like 430s, 440s. So it seems like the majority of the chat. We'll do the poll as well. Pump or dump on Meta. Let's do the poll. Pump or dump on Meta. And let's see. And then ARM, dude, I have no idea what to expect to ARM. I want to say ARM will figure out a way to pump because it always figures out a way. But then I also want to say ARM is a bit overvalued here. Meta, pump or dump. So I guess we'll see. That's the fun thing about having no position going into an earnings. Like the pre-jitters, like going into Palantir, I'm gonna be a bit nervous. Going into Robinhood, I'm gonna be nervous. Going into Meta, I'm nervous, but I'm not like, shaking. But I would imagine people that actually really own this company, this stock, they're a bit more jittery. So it's fun sometimes to go into IPOs having zero position. But then again, if the thing pumps and everyone's making money, then it's sad. But then if it dumps, you're like, well, I'm a genius. I don't have any meta. So it's what we see. You need to start adding break even. Are you even allowed to have I don't think YouTube allows you 3 options. Yeah, YouTube doesn't allow 3 options. They only allow 2 options. But yes, if they allow 3 options, we should have break even as well if it ends up being flat. Bitcoin is down 650 points. Yeah, Bitcoin right here. 65,200, 65,190, down 1.3% on the day. Yeah, most of you guys are bearish, dude. Most of you guys are pretty damn bearish. We'll have Meta in 3 minutes. So here we go. Here's the watch list. We're looking for 38 billion and we're looking for $3.78 of EPS. That's what we're looking for. And in a couple minutes, we're going to see. In a couple minutes, we're going to see. Now, when is the earnings start? Let me pull that up. I think it's at 5. So we'll have an hour. 5 o'clock. Yes, 5 o'clock. Okay. So 5 o'clock, we will have Meta earnings. Oh boy, oh boy, oh boy, oh boy, oh boy. Did ARM already go up with the earnings? No, not yet. ARM didn't go up with the earnings yet. ARM is going to be right after. Here's the watch list. ARM, Etsy, Enovix, Qualcomm, Meta, Lam Research, Teladoc. I mean, if we can get 6 out of 7 of these to just be green, decent numbers, maybe that's going to be okay. Political advertising revenue is going to be nuts. Well, I think Q3 is when that ramps up, but they should have started. Like Kamala Harris launched a $50 million advertising budget like yesterday. So that's not going to all go to Meta, obviously. But the fact is there's more people spending money on ads for politics. So I think in Q2, maybe they saw a little bit more of that momentum. And then Q3 is hopefully where it begins to inflect a bit higher. Oh, from the Olympics as well. Yeah, that's a good point. I forgot about the Olympics, dude. I have not been watching the Olympics at all, but the Olympics is another big advertising piece for Meta. ARM has a 15 PAG ratio. Yes, ARM it's up there, dude. It's up there in valuation. Considering Meta didn't gain much today, do you guys think that was intentional and save the gains to rip it for the earnings call? I mean, Meta's up 2%. I don't think it's necessarily about that. I think it's more so a question of the street just being a little scared. And they were up a bit more when JPOW was talking, but then it came down. So it's really a question of CapEx, revenue growth, monetization. I think they show monthly active users, not daily active users anymore. And overall growth trajectories and guidance. And like now the street's like, hey, you got to show me. Google and Microsoft, they showed us. We were a little scared, but they overall showed us. Now, if you can show us, we will continue giving this multiple. I think that is up 34% year to date as well. Going into this call. All right, here we go. We got 10 seconds. Let's see what we get for Meta. It is Wednesday, July 31st, 4 p.m., last day of July. The stock market is now closed. All right, here we go. Meta. All eyes are on Meta. I am pulling up all the websites I need. It's probably not literally out just yet. So we got no candles there Flat after hours. Still waiting. Let's see. Nothing on Twitter yet. Let me pull this up. Do we have moves? No moves yet. It's like it's silent, dude. It's like right before this thing takes off or goes down. We will see. Meta is slightly green after hours. Nothing crazy, but you do have a bit of slight green. If anyone gets the earnings quicker than me, put it in the chat. But yeah, we're not out yet. Oh boy. Your bell shocked everyone. I'm at the airport. I love it. I love people like, why the fuck are you listening with? Why are you listening to a bell? Is Qualcomm up? Qualcomm up. We got Qualcomm up 6%. Enovix up 5%. Enovix and Qualcomm, they're running. Enovix and Qualcomm are running. Qualcomm's up 8%. Holy crap, dude. Qualcomm's up. Qualcomm at 195 on the quality of the comms. Oh boy. Enovix up 5.48, 1525. I'll pull up their earnings in 1 second. Let's see if I can get these here. Meta, I still want to keep my eyes on Meta because I think that could have a move any second. Meta right here, slightly green after hours. Slightly green, and that's going to be the big one. Qualcomm numbers. And then the other one we're looking at is Enovix numbers. Meta, do we have Meta? Do we have green on Meta? We have a little bit more green on Meta. Qualcomm now up 5%. Enovix up 4%. They're giving back a little bit of their gains. I think the numbers are out for Meta, but it's not mainstream yet because we're seeing movement, but not mainstream yet. ARM is up. Oh crap. ARM is up. No, ARM's up 1%. At least on Webull, ARM's up 1%. Was it up 5% at one point? Oh yeah, I think it touched 5%. Then ARM's down. ARM's crashing. ARM is down. Oh my God. ARM is down. You're going to have to cut off your leg to afford this ARM. Down 4.3%, 4.7%. ARM is crashing. Down 5%. Let's see if it recovers that. Now it's recovering a little bit. Down 3.4%. ARM is down. Meta still no news. Qualcomm up 7%. Enovix up 3.4%. That's giving back some of the gains. Etsy is flat. Carvana is flat. Teladoc is flat. Lam Research is up 1%. ARM is now down 1%. ARM is now basically green. It's like struggling to stay green or be down 2%. ARM is down 3%. Okay, Meta still no move on Meta. Does Meta do 405? I think Meta does 405. Yeah, it has to be 405. Still no answer yet for Meta. Oh my gosh. Oh, Meta's up. No, it's not really up. Why did the 0.25% look like it was mooning? That was not the case. ARM is basically down 3%. Qualcomm's up 7%. Enovix is up 7%. Let me see if I can get Qualcomm numbers. I don't have them yet. What are the numbers? Okay, Qualcomm EPS 233 versus 225. Revenue 9.3 billion versus 9.22. Beat on the top and the bottom. So that's why you got Qualcomm up 6%. I'm assuming their guidance was really good as well. By the way, guys, the stock was up 9% today. So this is a 15% move, including regular trading hours. So whoever bought Qualcomm this morning, I mean, congrats, dude. What a hell of a move, especially if you bought some calls expiring this week around $200. You are printing right now. Enovix up almost 9%, 8.4. Meta up 0.25. Say ARM one more time, I swear to God. Oh my gosh. We gotta see. Now we're waiting on Meta. That's it. We're waiting on Meta. This is worse than when you send a risky text and you don't know what she's gonna say back. This is worse than that, bro. This is worse. This is you just don't know. What is she gonna say? What's gonna happen? What's gonna happen with Zucks? What is he gonna say? ARM is down 5%. ARM is struggling now. Teladoc slightly up. Lam Research up 1.2. Meta's up. Meta is up 5. Meta is up 6. Meta is up 6.2. Meta is up right now. 500 Dolores have been breached on Meta. Meta 5.4. 501. Let's see if it can hold. Oh, we're going to 7. We are going to 7. 7 freaking % on Meta. Talk about a gain. 510 right now on Meta. Can we get to 8? Can we get to 8? This is different than Microsoft and Google. That means Meta numbers must be pretty damn good. It looks like it wants to go to 8%, dude. Holy crap. What a move. What 8%. There you go. Congrats to Meta shareholders for now. For now. Let's see what happens, but it's up 8%. It's doing its thing. Doesn't look too wishy-washy. It looks sustainable. Meta numbers. Okay, here we go. Oh my God. Oh my God. It is so big, bro. Meta's EPS 516 versus 472. They beat by almost 50 cents. Revenue 39.07 billion. The street expected 38.3. They beat by 700 million on revenue. Almost $1 billion, bro. Holy fuck. Oh my God. Meta. Zucks is having the time of his life. What an earnings, bro. Holy crap. Congratulations to Meta shareholders. 512 up 7.2%. Zuck's crushed. Zuck's crushed. Zuck's absolutely crushed. Let's see if we can get some coverage on that. Let me see if I can get the actual numbers from the deck. Wow. Yeah, no, it's not out yet. It's not out yet. Okay, so we're still waiting for the deck. Not bad, dude. Goodness gracious. This is amazing. Up 7%. Okay, let me get earnings for Qualcomm and some of the other ones on deck. Let me get those numbers real quick on CNBC, and then we'll get to Meta. But this is pretty incredible. Congrats to Meta. I'm gonna get the deck up in like 2 minutes. Here we go.
Strong guide. Q3 revenue coming in at $9.39 billion versus $9.22 billion consensus. Non-GAAP EPS is $2.33 versus $2.25 expected. And Qualcomm is expecting, it's guiding to a Q4 revenue midpoint of $9.9 billion. That's in a range of 9.5 to 10.3, well above the street's consensus at 9.7 billion. The EPS guide is to a midpoint of $2.55 in a range of 245 to 265, well above the street's consensus at the low end of that range at 245. And I did have a chance to speak a few minutes ago with Qualcomm CEO Cristiano Amon.
Okay, let me pull up some other stuff, folks. Yeah, here we go. We got Meta. All right, here we go. Here is Meta. I'm pulling up the deck right now.
Morgan, Meta beating on the top and bottom lines, revenues of $39.1 billion, beating estimates of $38.3 billion, earnings per share of $5.16, far ahead of estimates of $4.73. Now to the all-important outlook. Meta is bringing up the low end of its CapEx range for the year to between $37 billion and $40 billion. That's up from the prior range of $35 to $40 billion. The full year total expense guidance is unchanged at $96 to $99 billion. And then in terms of third quarter revenue guidance, it's in a range just ahead of the analyst consensus. The company guiding to between $38.5 billion and $41 billion. That's a midpoint of $39.75 billion. That's just ahead of the $39.1 billion. That's the analyst consensus. We're going to dig back into this report and we'll be back to you with more.
Julia, interesting here that they just raised the low end of their capital expense guidance. If I recall, and keep me honest here, there have been some reports that Meta was shifting, perhaps pulling back on metaverse spend in the near term and continuing in AI spend. And maybe that's what helps them be able to be more friendly to investors on the capital expense side relative to the likes of Microsoft.
Yeah, I mean, look, last quarter was notable because they raised the capital expense range in general. So pushed up the top end of the range as well. And they said that was because of AI. They said, we're investing more in AI. This is a long-term investment, and this is part of a bigger investment cycle.
So they only raised CapEx by a couple billion. I think that's why the street is also liking it. They're really not spending that much more, which is good.
So I think there was some concern by investors that they might continue to increase that range and push it up even higher. But I think what we saw now is a narrowing of that range. So yes, the top end of that range is staying the same, but they're pulling up the bottom end of the range, but not pushing the whole thing higher.
All right.
And I'm sure there are going to be plenty of questions about this on the earnings call, John.
Oh, more than a few.
It brings up a lot of questions. I'm curious why Nvidia's pumping, folks. Nvidia's almost hitting 120, 119 right now. Why is Nvidia pumping if Zucks is not spending as much on CapEx as Microsoft and Google are in terms of the rate of growth of spend? Is it because Zucks understands his like spending sort of sentiment in the context or temperament in the context of Nvidia? Or is it because, quite frankly, they've already spent so much money building out their GPU data centers, 600,000 GPUs, 24 billion bucks, that they don't need to spend that much more? But regardless, I'm confused why Nvidia is getting a little bit more of a bump based on that. Maybe it's just because in general, Meta's spending a lot, even though they're not spending as much as Google and Microsoft. And that goes to show $5 of EPS on Nvidia by 2025 is very likely if the hyperscalers keep spending. Qualcomm's up 5%. Enovix is up 9%. Etsy is down 3%. Let me pull up Etsy's numbers. I still don't have the Zucks deck, the meta deck. Oh, I got it. I just got it. Never mind. I just got it. Okay. We will delay Etsy because we got to look at meta numbers. So here we go. Here we go. Here's the numbers. All right. So family daily active people was 3.27 billion. That's across WhatsApp, Instagram, and Facebook, and maybe Threads. I don't know if they include Threads in that, but that's insane, dude. That's up 7% year over year. 3.27 billion people use a Meta product every day, which is up 7. I mean, that's a lot of people. It's incredible that they keep finding these people to use it. Ad impressions delivered across our family of apps increased by 10% year over year. That's bullish. That's why they beat on revenue by 700 million. Average price per ad increased by 10% year over year. That's good. They have pricing power. Total revenue was 39.07 billion, an increase of 22% year over year. Costs were up 7% year over year. CapEx was 8.4 billion. They bought 6 billion of stock and they paid out 1.2 billion in dividends. I forgot Meta has a dividend. Forgot about that. Cash is 58 billion on the balance sheet. Free cash flow is 10.9 billion. Headcount 70,000. They decreased by 1%. So they're buying back shares. They're giving a dividend. They're decreasing their overall employees slightly to become more efficient. The average price per ad is increasing. They're increasing the daily active people. They're increasing the amount of ad impressions. I mean, what is there not to like? What is there not to like? What is there not to like here? Meta slightly down right now. It was up to 515. Now it's at 348, 491 right now. Maybe Zucks on the earnings call says something that the street likes. But the good thing is, whether it's at 475, which would be slightly higher than when it closed, or it's at 515 or 491, it's not tanking like Microsoft was. There isn't some massive miss or some problem that makes you get really scared. So, again, Meta's up still 40% year to date now at this point. Like it's probably not going to get a crazy premium attached to it, especially given the volatility that we're experiencing before the election, before the rate cut. But the AI super cycle in the hyperscalers is real and it's not going anywhere. It seems like it's not going anywhere. Okay, Carvana. Carvana is up another 9%. Carvana is up 9%. Carvana probably had another profitable quarter, which is why Carvana is doing well. So let me pull up Carvana's numbers, but let me get some other numbers as well. Here's eBay. I didn't even know eBay was reporting today. So let's do eBay right now.
Hey, John. Yeah, so it's looking like a beat on the top and bottom line. And Q3 guidance is also looking better than expected. Let's start with that EPS number. This is the adjusted number, beat by 5 cents here. It came in at $1.18. And then revenues as well, slightly above estimates at 2.57 billion. Gross merchandise volume, this is a key metric the street's watching, 18.4 billion. That was better than expected. And then on that guidance, I mentioned Q3 EPS guidance at the midpoint of the range, higher than expected. Same thing here on revenue guidance as well. Margins looking like they're in the double digits here. Operating margins of 21%. You can see shares dipping slightly despite that beat. John and Morgan, back over.
Okay, Carvana numbers. So that's eBay. Carvana. It's good for eBay, even though they're beating on the top and bottom line. The stock is whatever, but it shows the consumer still is spending on something like eBay. We'll go deeper into their numbers. Carvana total revenue 3.4 billion versus 3.24. So they beat. They sold 101,000 cars. Adjusted EBITDA 355 million versus 251 million. Guidance on Q3 looks like it is positive. Carvana is up 9%, 9.3. Last time, I think on earnings, Carvana was up like 40%, like some ridiculous number. So Carvana was already up 5% of the day, so it's up 14% now. And Novix is up 10%. I'll get their numbers in a second. Meta's still up 4.7. Etsy's down 1%. ARM is now tanking. ARM is actually tanking, down about 8%. ARM is down. ARM is indeed down. Lamb Research also is down 4%. I want to see ARM numbers. Let me see if I can get ARM numbers because those are important, and then we'll get into the rest of these. Oh, here we go. So I have Carvana. So while I pull up ARM, we'll listen to Carvana real quick, and then I'll pull up ARM. I'll pull up ARM in a second. NVIDIA after hours. Where's NVIDIA? NVIDIA is up 119. Yeah, still up 2% right now.
All right, Julia, thank you. Carvana earnings are out. Phil LeBeau has those numbers. Phil.
Morgan shares are up more than 12%. Why? Because of a big beat on the top of the bottom line. Second quarter earnings for Carvana, a profit of 14 cents a share. The street was expecting a loss of 7 cents a share. Revenue better than expected at $3.41 billion. And then you look at the numbers within the numbers, and it's easy to see why they had the strong quarter. Vehicles sold, retail vehicles sold, more than 101,000. The street was expecting just 95,000 to be sold in the second quarter. That's an increase of 33% compared to Q2 of last year. EBITDA margin, adjusted EBITDA margin, 10.4%. Gross profit per vehicle coming in at $7,344. In terms of guidance, Carvana says it expects Q3 retail vehicle sales to increase relative to the second quarter. And for the full year, it is now expecting adjusted EBITDA of between $1 and $1.2 billion. Again, shares surging after a big beat on the top and the bottom line. Guys, back to you.
Yeah, it's quite a surge in.
Okay, ARM. Let's go to ARM. We'll go back to Carvana in a second. I'm confused why ARM is down so much. This is, if I'm not wrong, this is a great quarter. So ARM revenue, guys, $939 million. The street won in 902. They beat by $37 million. But that's a pretty damn good beat. EPS, the street wanted 34 cents. They put up 40 cents. And Q2 revenue, they're guiding for 830 million, which that might be why the street's upset. Revenue growth is up 40% year over year, which is also really good. 39% year over year. Record license revenue, record royalty revenue, 472 million, up 72% year over year. Royalty revenue, 467 million, up 17% year over year. Their current guidance is unchanged. So their prior guidance was 3.8 billion. Their current guidance is 3.8 billion. Oh, so they didn't change anything about guidance. That's why it's down. Yeah, that's why it's down. So this was a good quarter, but as you can see right here, full year 2025 change, they haven't revised it at all. And I guess the street wanted a beat and a raise for it to get some value. I know ARM is overvalued, so I can understand why it's down, but the headline results aren't that bad. So I didn't think it would tank just on that, but I guess if you don't have good guidance, we see you get hit. ARM now down 9.7%. Price of sales from 46 will probably go to like 40, which is a little bit more reasonable. 129. Etsy is recovering most of their losses. Meta's still up 5%. Qualcomm up 6%, and Novix up 10%. All right, let's do Novix next. Let's get the Novix numbers. Let's see Novix. Novix announced a collaboration agreement with a Fortune 200 company to provide silicon batteries for a fast-growing IoT product category that already has tens of millions of users globally. So Novix signed a deal with a Silicon Valley VR company. They signed a deal with a Fortune 200 company as of today, and they signed a deal with a top 5 OEM for cell phone manufacturers. It seems like Novix is just getting deal after deal after deal, and they're crushing. And that's why they're getting even more benefits. EPS, they lost 14 cents. The street thought they would lose 23 cents. So a beat on an EPS. Revenue, the street wanted 3.6 million. They brought in 3.7 million. So that also is a beat on revenue. Market cap, 2.45 billion. I know sounds kind of crazy. Revenue is 3 million. Market cap's 2.4 billion. But really, you're buying future growth from Novix because you believe they have a fundamentally differentiated product in terms of their silicon chips or their silicon batteries that they offer to tech companies. And if you believe the iPhone and the Meta Quest and the Vision Pro are going to be, you know, billions and billions of users using them one day, iPhone being more advanced AI iPhones, then Enovix might end up control the battery for a lot of those devices. So that's why you buy Enovix right now, up 11% after hours. Meta still up 5%. Qualcomm up 6% on the day. Where's Bitcoin? Bitcoin's taking a hit. Bitcoin. Yeah, I think the Bitcoin stuff is the Iran news. Quite frankly, I think that's the like sort of black swanish. Then Bitcoin does not like the geopolitical stuff. Otherwise, I don't know why it's down 2% right now. Actually, I'm not sure, but that would be my best guess. TMDX, they also had earnings. Yeah, let me put that up as well. This is a interesting company. They're up 9%. Let's get their earnings. This is a popular one on FinTwit. I think it's ran a lot this year already. TMDX, in the beginning of the year, TMDX was 75. Now it's 142, 150. So almost a double, basically a double you got on TMDX. Their earnings looks like a triple beat. Total revenue of 114 million. Wow, that's up 118% year over year. Net income, that's up as well. 12.2 million, 35 cents a share. And they increased guidance from 390 to 400 million. Stock is up 12% after hours. Not bad, dude. Not bad for this one. I don't cover this one that in depth. I don't have any TMDX, but I know this one is popular and it's done very well over the past year. Amazon is tomorrow. What happened with Lam Research? So what's going on with these guys? What happened with Lam Research? Lam is down 2.5%. I like my Lam over Rice, but I'm confused what's happening with these guys. LRCX. EPS of 778 versus 758. They beat revenue. They took a nasty revenue miss. Revenue 3.87 billion versus 4.82. You don't want to see that on a semi company. You want to see them beat on the revenue. Otherwise, the demand really gets into question. So they're going to need to have an explanation on the call why they missed on revenue. They're going to need to have an explanation on that one. Riot after hours. Nothing's happening with Riot after hours. Riot is down 1%. Riot's down normally, unless I'm looking at the wrong Riot. But Riot looks like it's down. It's down normally. Yeah, so that one, Lam Research, yeah, so they missed on revenue. TMDX again up 8.2%. Etsy up 2%. Let's see if I can get Etsy. Riot had earnings today? Riot had earnings? Really? Riot's revenue is down 70 million. Riot's the Bitcoin miner, right? Well, they're not down that much after hours. Riot, oh boy, did they just do a dilution? Did Riot just do a dilution? Riot lost 84.4 million this quarter. So that's not the best. Total revenue of 70 million as compared to 76 million last year. Okay, so revenue is down. Wow, I didn't even know Riot had earnings today. Okay, I forgot about that. Let me add this to the list. But their stock's not really taking a hit after hours. It's down 1%. So yeah, and Riot really moves with Bitcoin. At the end of the day, Riot could have crappy numbers, but if Bitcoin goes up, it doesn't matter. Like for a lot of these Bitcoin miners, they're going to move with them. But yes, Riot decreasing in revenue growth and losing a bit more than expected. Meta's still up 4.5%. Meta's holding on to their number. Okay, let me pull up a couple other of these decks and let me see if we can get Etsy. Because I want to see if we can get Etsy. Do we have Etsy? Yeah. No, we actually have. We never went through the exact ARM numbers. Let's look at that real quick, and then we'll get more Meta. Then we'll get Etsy.
EPS was 40 cents adjusted. Street was looking for 34 cents. And revenue, $939 million. Street was looking for 902.7 million. We see shares down about 4% here. As for outlook, seeing Q2 revenues of 700 to 830 million versus 804 million estimated by the Street. So that is about the midpoint there. And again, we'll keep digging through this, but shares are down despite these beats on the top and bottom lines.
Okay, Steve Kovac, thank you. Meta results are out. We're going to those.
Okay, so Etsy numbers. I have Etsy. I have Etsy. Etsy beats on revenue by 20 million, 647 versus 629. EPS beats by 2 cents, 46 cents versus 44. Not a really impressive rate or not an impressive beat on the top and the bottom, but they did beat. You guys are saying Bitcoin is crashing. Where is Bitcoin? Bitcoin. Yeah, Bitcoin's down 2%, 64.7. Let's see if we get to 63 on Bitcoin. I don't know why Bitcoin's crashing. If you know, let me know in the chat. The only thing I can say is Iran saying they're going to retaliate, I think is the reason, but otherwise I am not sure. Okay, Etsy. What do we have on Etsy? Consolidated GMS was 2.9 billion, down 2.1% year over year. CEO said, we are pleased that the second quarter consolidated results included sequential acceleration of Etsy Marketplace year-over-year GMS, higher consolidated revenue both year-over-year and sequentially adjusted EBITDA profitability. Gifting is proving to be a winning theme, driving growth as the key source of differentiation for Etsy. We are making excellent progress with other bold moves and investments meant to raise consideration among buyers to help us stand apart more than ever. While this is a challenging environment for our types of goods, we are focused on reigniting the Etsy Marketplace growth and gaining market share. Net income, 53 million. That's down 9 million year over year. Revenue is up 3% year over year. Wow. So they're really not growing, dude. Revenue's only up 3%. Net income's down. There's not a ton of growth. They have 1.1 billion in cash. And they bought 2.4 million shares in the quarter. That's it on Etsy. Bitcoin 64,804. Yeah, Bitcoin's not like, it's not really tanking. It is tanking from 70,000 that we had a couple of days ago, but from today it was at like 66 down to 64. Nothing too crazy, but again, I do think it's more geopolitical. Meta's still up 4.6. Etsy is now green after hours. Etsy not really telling us too much about the state of the consumer outside. I mean, like, it's not a big beat on the top line or the bottom line, so maybe the consumer is slowing down a bit more, but it's not a big miss either. Teladoc's down 10%. Of course, that was the most predictable thing ever. Nvidia is up 2%. Enovix is up 12%. Qualcomm is up 5.6.9%. Now, Qualcomm seems to be up from iPhone sales, is what it looks like they're mentioning in their report, and that's why Qualcomm is gaining momentum right now. So that's what Jose talked about on the stream, which is, part of the reason why he was bullish on Qualcomm as well. Okay, Riot earnings, revenue of 70 million, down from 76 million. Net loss was 84 million or 32 cents a share compared to losing. So they're losing double the amount they lost last year. It's 32 cents versus 16 cents. The net loss for the quarter included a change in fair value of Bitcoin. Okay, that's fine. Produced 844 Bitcoin during the quarter, which represented a decrease of 52%. The average direct cost to mine Bitcoin was $25,000. The increase was primarily driven by the block subsidy halving event, which is up $5,000 year over year, which occurred in April 2024, and an increase in 68% of global network hash rate. CEO says, I'm extremely pleased to present results for Riot's second quarter, during which we accomplished significant operational growth and execution of our long-term strategy. The second quarter saw the Bitcoin network halving in April this year, a pre-programmed event. Riot generated 13.9 million in power credits. Yeah, I mean, nothing that crazy for Riot, dude. It's a Bitcoin miner, and Riot more so is down after hours because Bitcoin's down. It's not really because of the results. The results are whatever. I mean, look, Riot's not my favorite Bitcoin miner, but at the end of the day, whatever Bitcoin miner you buy, you have to believe that you cannot buy a Bitcoin miner off the fundamentals. There are no fundamentals. I mean, there's some, like, do they dilute you a ton? But like all of them dilute you. So it's really about Bitcoin. You're getting a proxy to Bitcoin. So Riot down 1% after hours on earnings really, I think, has to do with, like, if Bitcoin was 75,000, I don't think this would matter. So that's what we have on Riot earnings right now. My favorite miner is CleanSpark. I don't own them anymore, but that's my favorite miner. Okay, let's get some more coverage on Meta. What are you guys thinking? This is a decent earnings. I mean, this is a decent earnings not only for Meta. This is a decent day 2 of big tech earnings, especially after Microsoft. Microsoft was really emotional yesterday. This is less emotional, and this seems more normal with what we have in earnings. Okay, so let's get some coverage on Meta. And then we'll keep going from there. Yeah, most people feel it's pretty normal. Most people feel it's pretty normal. Okay, here we go. We covered Carvana already. We covered Carvana. They crushed on earnings. They're up. They beat on revenue, EPS, and cars sold. So that's why Carvana is up 12%.
And how they're applying it internally, seeming to gain some traction. Are there still lingering concerns about TikTok and the Facebook part of the platform being dead, or no?
Yeah, I mean, listen, I think you always got to worry about the competitive pressures that are out there. But as far as kind of, Meta is concerned, I think they've kind of really, navigated some of the concerns and the storms that we were hearing, 2 or 3 years ago, and executing extremely well, clearly integrating AI across their ecosystem extremely nicely. And you're kind of seeing kind of some of the fruits of their investments really kind of, play out nicely here. I mean, you kind of look at, the growth rates here for Meta relative to its peers out there. They're kind of really nicely outpacing those of its peers. And you kind of look at the guide here for Q3. We were probably more concerned about Meta relative to the others because of those difficult comps. Got the most difficult comps kind of across the space, but you kind of look at how they're performing here in the guidance. I think you've got to be pretty happy with where they're at right now.
Okay. So Mark, when you have the CFO, Susan Lee, saying here in this release that while we do not intend to provide any quantitative guidance for 2025 until the fourth quarter call, we do expect infrastructure costs will be a significant driver of expense growth next year as we recognize depreciation and operating costs associated with our expanded infrastructure footprint. I realize they didn't raise the upper end of their 2024 CapEx guidance. They did raise the lower. I know you just talked about that, but does that suggest perhaps that we haven't seen peak spending for this AI infrastructure build out?
I find that commentary by the CFO to be pretty vague. You could do a lot of things with that. I'll just give you my opinion, which is no, I don't think they're at peak CapEx related to AI. I think their CapEx is going to rise. Now, I think the street has that in its models. We have it in ours. You should assume that CapEx is going to continue to rise. The question is, are you getting a return on that? And investors need to know two things. One is that you've already seen a return with Meta over the last 2 years. I mean, they rebuilt their ad tech stack thanks to Apple's privacy changes. They rebuilt their ad tech stack using AI, and they changed their user interface and generated a lot more engagement because of AI, and it's showing up in the revenue and the profits now. Last quick point on Meta is, hey, it's not priced for perfection. This thing's trading at 19 times, 20 times earnings for something that we think can sustain 20 to 30% earnings growth. I think there's room for the multiple to rise from here. If you're a bull on Meta, you should be happy with these results.
Got it.
That's a fair point. He's expecting 20% earnings growth. This quarter, they delivered more than 60% earnings growth. So I think it has to be 70% because they beat by 44 cents. So that's fair. That's a fair point. So we'll go back to this, but I have the Meta deck. So let me pull up the Meta deck and we'll look at some other numbers as well. Meta right now, by the way, Palantir is at 27.01 after hours. Robinhood's probably taking a shit because of Bitcoin. Robinhood's up after hours. Okay, Robinhood's up. Coinbase is, wow. Why are Robinhood and Coinbase up after hours if Bitcoin's down 2%? That's weird. MicroStrategy has to be down. MicroStrategy is up too. Why are all the crypto companies inversing Bitcoin after hours? That is weird. I did not expect that one. Interesting. Very interesting. That one's weird. It might be a pump fake. Yeah, it might. That is weird. AMD after hours. MicroStrategy just went red. Okay, but it's like barely red. I would expect them to be down a little bit more right now. AMD is 145. They were up 4%, 5% on the day. The 8K just came out for Hood. Okay, I'll check that out. In a bit. Okay, Meta earnings. So advertising revenue by user geography. I always love looking at this stuff because it goes to show you how top heavy Meta is in terms of like North America and Canada, or Canada's part of North America, but the United States and Canada contributing to the revenue. So look at this. The US and Canada brought in 16 billion, almost half of the revenue, and the rest of the world brought in about 5 billion. Asia brought in 7.7 billion. Europe brought in 9.1 billion. Okay. So nice growth across every sector here for Meta. Advertising brought in 38.329 billion and other brought in 389 million. Reality Labs brought in 353 million. So basically this is why they're spending so much on GPUs, because if advertising is basically 99% of revenue They need to really make sure that it's effectively scaled and that the targeting is better and better. And that's with AI. Look at this. In Q2 2022, 2 years ago, they were doing 28 billion a quarter. Now they're doing 39. Sorry, they were doing 28.8. Now they're doing 39.0. I mean, just incredible, dude. Just incredible. Operating margin of 38%. That's consistent over the past couple quarters. Expenses as a percentage of revenue, 19% cost of revenue. Marketing is 7%, research 27%, and general and admin 9%. So all of those are relatively in line. They pay 11% in taxes, corporations, they figure it out. So if Trump wins, this is probably going to be even lower, but 11% in taxes. Net income, 13 billion. So it's not Google or Microsoft putting up 23 billion in net income, but still 13.4 billion in profits is pretty damn incredible. 516 earnings per share. CapEx, 15 billion year to date, 8 billion this quarter. It was 6 billion a year ago. So it's up from 6 to 8 year to date. Last year, they spent 13 billion. This quarter, they spent 15 billion. So they're only up 2 billion from last year. It's really not that crazy, which is probably something they're going to talk about on the earnings call as well. 3.27 billion DAP. Average revenue per family person is $11.89. Ad impressions are up. We talked about that already. And there you go. That's it. And then free cash flow this quarter was 10.8 billion. Solid quarter, dude. Solid freaking quarter by Meta. And Nvidia likes it as well. After hours. Lam Research still down 2%. Teladoc down 12%. ARM is down 8%. Etsy slightly down. Qualcomm up 7%. Meta up 3.4%. And then Transmedics Group up 8.25%. Now, we didn't look at Teladoc. Let's look at Teladoc. I don't think Teladoc's that interesting, but let's just see what they reported. What did they say? Teladoc. Again, Kathy's been selling this one a lot. Teladoc, all right, second quarter results. Again, this was really a big thing during COVID when everyone was at home, but here's Teladoc. So second quarter revenue, 642 million. Wow, down 2% year over year. Net loss of 837 million. They did another goodwill impairment charge. What? They did a goodwill impairment charge a year and a half ago. They're doing another one. They lost $1 billion this quarter. Goodness gracious. I'm surprised they're only down 12%. CEO said, I'm excited to have joined Teladoc Health for the opportunity to lead the company. Is this a new CEO? Why does it say I'm excited to have joined? Or maybe he was announced a couple months ago. I see opportunities to strengthen execution and to streamline the organization. Yeah, this one's nothing, dude. This is why Kathy's been selling. There's nothing there. There's nothing in Teladoc. That is surprising, dude. Another goodwill impairment charge? I did not expect them to do that. Again, a goodwill impairment charge is basically like an accounting process where you can essentially write off or reduce the value of goodwill on the balance sheets and income statements that you have of a particular asset. So I don't know what asset they're writing off as a goodwill impairment charge. Last time, I think it was a bunch of like technology devices that they wrote off, or maybe depreciating buildings. I think it was some mixture of that. This one, I'm not sure which one they're doing, but it's about $500 million. So 870 in total, close to $1 billion. Or no, sorry, it's $790 million. They lost 870. So basically 95%, 85% of their net loss was because of this goodwill impairment, which is weird, dude. Like they did that. Remember when, look at their chart. When Teladoc tanked in early 2022. So this was when they were at 150, basically the beginning of 2022, and they tanked right here to 33. Sorry. When they were at 70 and they tanked to 33, this was April of 2022. I remember I was live during this moment. That's when they took the goodwill impairment charge. So 2 years ago, they already did this, and it looks like they're doing it again. Now they're down 12% after hours. Meta's still up 3.69% on the day. All right, that's what we got on Meta. Zuck speaks in about 20 minutes. Zuck is going to speak in 20 minutes. Let's get more coverage on Meta. But we will hear from him in 20.
Got it. Okay. Angelo, read through, especially on the digital advertising front. what's the read through to some of the other companies we haven't heard from? Because so far it's been pretty mixed quarter. I just look at Pinterest yesterday to see an example.
Yeah, no, absolutely. I mean, you kind of look across, maybe kind of, Meta, Pinterest, and YouTube. And, clearly we're seeing growth rates starting to decelerate here, but, some are definitely holding up better than others. I think at this point in time, it's more of a relative expectations kind of thing, right? And Meta has been able to kind of sustain their growth rates kind of maybe better than some of their competitors out there. But that said, I mean, the digital ad market still looks pretty healthy to us. Clearly.
All right, let's get my own contributor joining in to talk about Meta earnings. He has a big position in Meta, and let's see what he has to say. Stephen Fiorillo, you are live on the market close. I know you have a big position in Meta. What are your raw thoughts on this earnings?
Can we quote the great Dan Ives for a moment?
Okay, go ahead. You got it.
That it is 9 p.m. in the party, and this party is going to go to 4 or 5 in the morning.
You really believe that? You believe that's going to happen?
Oh, I believe that's going to happen. Oh, yeah.
Okay, so I mean, look, the stock was up like 8%. Now it's up 3%. Overall, good earnings. What did you take away from it?
I'm driving home from the office right now. I saw the headline numbers. I love it, and I'm going to obviously go through the entire report tonight and listen to the call. But like I said to you and Chris the other night, and on the phone when we talked, there's 4 companies that can compete in this market at the end of the day, and whatever AI is going to become, Meta is going to be a dominant force in that sector.
Steve, are you using headphones or anything?
Well, I have a headset on.
Okay, because people can't hear you. I can hear you pretty well. I'm checking. Give me 1 second. Let me check the stream real quick to see if it was actually that bad. Oh, no, you're clear. You're clear. Guys, what are you talking about? He's clear. Some of you guys might have to turn up your volume. He's very clear to me. I just checked on the stream.
I should be pretty clear. I'm using the same headset I always use.
Yeah. Yeah, guys, he's very clear. He's very clear. Okay, so
I mean, this is.
Go ahead.
They're going to be one of the companies that nobody can compete with. They have a blank checkbook. Same with Alphabet, same with Amazon, and same with Microsoft. And how silly is the market with Microsoft? How silly.
So all right, so we got about 20 minutes until Zuck speaks. So I want to get more thoughts on Meta, but first on Microsoft. So we fell on that silly, as you said, cloud miss. Why do you think the market is so fragile on these slight misses to tank them 10%?
I think people are looking, and think about when it tanked. There's no way anybody could have went through the entire release and all the numbers in that time frame. They looked at the headline number. All they did was look to see what Azure did. It came in less than expected, so it sold off. That's not how investing goes. You got to look through the entire report. Microsoft killed it. They killed it.
I would agree with you. I think they crushed. And when I think the street saw the numbers and heard the earnings call, they realized things are in the right direction.
And they are spending so much money that they are going to generate a large ROI for years to come off of these investments. I truly think this is going to be a springboard for the next 3 to 5 years.
So you really do feel the party is getting started right now?
Dare I say it may even be 7 p.m. and people haven't even driven to the party yet?
Do you think you're just a little too bullish because your biggest holding did well today, or are you being objective here?
No, listen, hard for anybody. I'm not saying you're saying this. I'm just making a general statement. It's hard for anybody to say that I am front running Meta when I was bullish when it crashed in 89. And I have documentation, an article I put out very bullish at 91 saying that this is uncalled for. This is absolutely ridiculous. And Meta is going to rebound strong. Brad Gershner, me, and a couple other people were the only ones that were very bullish at that point. Vitaly. I mean, it's just.
No, I remember the fear, dude. The headline was Meta's the next AOL when it went to 90.
I was never scared one bit because outside the actual financials, there is not a single other company that I know of that has more than a third of the global population utilizing its products on a monthly basis.
Yeah, you send me an Instagram reel every 30 minutes.
Funny.
Do you not, Steve? Do you not? You send me a lot of
I
reels.
mean,
So-
I send you stuff when, there's interesting stuff that pops into my feed.
Yes, but the point is you use Instagram. I use Instagram. Even if people don't use Facebook as much in the United States, a lot of them use it across the world. It's not going anywhere. It's just
Not going anywhere. It's very early. And we don't know how things are going to get monetized yet. All I know is that the amount of money that's being spent on AI infrastructure and building out whatever these companies are envisioning AI to become, nobody is going to be able to compete with outside of these companies in the Mag 7. I mean, to think that anybody can actually, and I don't even think the whole chat GPT thing is a good argument against Alphabet because one, they're being backed by Microsoft, so it's really Microsoft. And two, nobody's using Bing. Come on. Nobody's using Bing.
Yeah, I don't.
I'm just saying. I mean, not only is Google the preferred search engine on Android, I think that 89 to 91% of all search traffic goes through Google. It's just nobody's using Bing. Nobody cares about Bing. It's just, I don't know. I'm not worried about any of that.
So what do you want to hear from Zucks whenever you like go through the call? Do you want him to speak to Threads, WhatsApp? Like as a shareholder, what do you want to hear about?
No, I don't. Listen, I don't care about Threads. For me, it's more how they're going to grow the advertising business, how they're scaling AI, I would like a outline in a perfect world of the next generation of products and how they're embedding AI into their current platforms in order to basically destroy the competition.
Right.
They got to be clear. Zuck's got to be, and he's always very good about being clear about those aspects of the business. And he has to say, listen, this is what we're doing with AI, and this is why we're a better value proposition. And this is why Snapchat and these other companies can't touch us and they won't touch us. And he needs to talk about the next generation computing platform and all that good stuff and why it's important for advertisers to utilize their algorithms and how they can generate a lot of return on an advertiser's investment from utilizing an ads package across their platforms. That could be the most important thing that somebody on the call talks about. Because when it comes down to it, the lion's share of their revenue is generated from advertising dollars.
Yeah, Snapchat's up 4% after hours as well on this.
Good, because I got a big position in them too.
You have Snapchat?
Had Snap for a long time.
You never told me you owned Snapchat.
Yes, I did.
No, you didn't.
Absolutely, I did.
I'm assuming you're underwater on this one.
No, I'm up.
You're up on Snapchat? Wow.
Yeah, what's Snapchat at? 15?
13, 70, whatever.
Yeah, I'm up.
Dude, I did not know you built a position in Snapchat. I thought you hated that one. Okay.
I didn't say I like them, but I own them.
Do you use Snapchat?
No.
Interesting. So you never did any DD on the actual.
No, it was just one of those things. I was actually interested in starting a position in Pinterest too. I just never did. My wife was, I think is one of the smartest people that doesn't talk about investing ever. And I think her win ratio is like 95% or something like that. Like whatever she touches works. And she wanted to invest in Snap, so we invested in Snap. And I mean, it's not Meta, but it's certainly working at the moment.
So you've never sent a Snapchat ever?
No, I don't even know what it does.
Why don't you download and add me tonight? We get Snapchat.
Because I don't have time for that.
Well, you have time to send me Instagram Reels, but not. Okay, yeah. So talk to me about PayPal, Steve. This one's up another 4% today. What do you think about it?
Yeah, I'm glad I had to roll my options tonight. That made me very happy.
Why do you think they spiked from 56 to 65?
Doesn't it feel like Alex Chris basically said, Steve, you're a jerk. I'm going to just increase buybacks so I don't have to hear you complain anymore?
Yeah, I think he heard you on the market close probably 20 times, and he decided, fuck it, we're just going to give Steve another $1 billion in buybacks because he's getting annoying.
Maybe this guy will shut up.
I mean, you called it. He increased the buybacks. You were right. They did it.
I mean, look, This is my problem with PayPal. If you looked at the article that I wrote last night, it came out this morning.
Oh yeah, let me link that for everybody. Yeah.
PayPal trades as if it's a tobacco company. Philip Morris has a larger multiple on 2026 earnings than PayPal. It has a larger multiple than 2024 earnings. Now, this is also yesterday before the bump today, so they could be around the same area. But as of last night, Philip Morris had a more lucrative valuation. All I've heard for the past 2 years is PayPal's dying, PayPal's dying. Companies who grow their revenue are not dying companies. That's one. Two, PayPal has $9 billion in debt or so. They have more cash and short-term investments on hand than their debt. There is no fear about anything bad happening with the company, and we're seeing more transactions. I think people are focusing on the take rate and active accounts rather than total payment volume and how that translates to revenue,
Right.
and how that translates to profitability. And they're increasing their free cash flow to $6 billion this year.
They raised their guidance.
Raise their guidance. This is a company that can buy back every last share at these prices over the next 6 years. Sorry, not 6, over the next 11 years without tapping the debt markets. Like, the valuation doesn't make sense. And for me, I think the fair value right now is about $83.50. I don't know fair value. That's what they should be valued, because at that point, they're in the same wheelhouse as Philip Morris as a multiple. And when you think about it, do they really deserve to trade like a tobacco company? I think that this is something that should trade from between 20 to 25 times earnings, even if it doesn't have as much growth as some of these other companies. Over the next 2 years, they're still projected to have, I think, 20 or 21% growth in EPS. And that's assuming they don't beat estimates. Like, this is not a dying company. And I just think the market has it wrong.
Would you buy more here after those earnings?
If
Personally?
I didn't have a position I was happy with, I would buy more. Or let me put it this way. If I didn't get in at the price I got in at, and I had a position, but it was in the red, I would seriously consider adding more to dollar cost average at this point. For me, I wouldn't buy more here because I have a good position that I've actually reduced my cost basis from about 58.40, I think is my actual average, somewhere in that area. And I think I've taken that cost basis down to about 54 something after the cover calls I've ran.
Got it.
So it doesn't make sense for me to add more. I have enough where I'm able to generate good income off the cover calls and reduce my cost basis, and I'm in at a good price point. But if I bought this at 110, I would be in.
What did you think about Jay Powell today?
You know what I think about Jay Powell.
I'm curious. Tell everybody what you think about Jay Powell. I'm curious.
I think that Jay Powell is being too conservative. I think that his speech was ridiculous, and I think that he should have cut. I think he should have cut in May. I think he should have cut today. I don't think he should wait till September. I think he's playing with fire. We just saw more companies announce that they're going to be laying people off.
Intel, 10,000 people laying off.
Intel's laying people off. There's another 4 or 5 tech companies laying people off. I don't think now is the time to play it safe. And look, he talks out both sides of his mouth. In one breath, he's saying that the Fed is not in alignment with when a cut could come, and they're prepared to keep rates where they are until they get more confident. And then on the other side of his mouth, he's saying that, well, you know, the next move is probably down and there could be the potential for a cut in September if we keep seeing the trajectory that we're on. I mean, unemployment's up to 4.1%. When the job action happens for Intel and these other companies, I'm afraid it's going to keep going up. That's not good. They need to cut rates.
I think Jay Powell's afraid of that too, which is why he basically said we're going to do it without, saying it. But you're saying it should have been happened earlier.
Yeah, because think about it. If you pull rent out of the inflation report, you're pretty close to 2%.
Yeah.
And the only way you're getting rents down is to lower the cost basis of the lenders, and you do that by cutting rates, because then you eventually get to a point where people who own property can refinance, and when they refinance, their overall nut for the month comes down.
I agree. I think it's time to cut these rates. So I think if we don't get it in September, then I mean, all hell's going to break loose. But
like, what's the difference between September? He's only cutting by 25 bips. So you cut now, and you have 2 months, and you see how the market reacts to it. There's no reason not to do it. We're not talking about chopping off 150 bips off of the freaking rate. Talk about 25 bips.
I agree. So last question for you, preview us for tomorrow. Amazon and Apple. What are you thinking?
Amazon crushes.
How much of it, like, breaks 200 finally, or?
Oh, I wouldn't be surprised if Amazon goes past 200. I think they crush earnings. I think if you look at the trajectory, and the grid in my last article, I have a 4-chart graph, and you look at the trajectory of cash from operations and their free cash flow, inflation coming down, and I just think that their input costs are going to decrease a little bit. They'll probably have a little bit better margin. And you look at what Google Cloud did, you look what Azure did. By the way, the only reason there was an Azure miss is because they had capacity constraints.
Yeah.
You look at that, you take that into consideration, AWS should smash, and they should have a little bit better margins, international and domestic, on their actual e-commerce business. I think they crush. And Apple, I think Apple is great long term. I don't know if this is the quarter that is the blowout. I think tomorrow, the earnings call for Apple is more important than the quarterly numbers.
Yeah, I think if they just give the right guy, I mean, Qualcomm is up right now primarily because of increased iPhone demand. So if that's what Tim Cook signals, I mean,
Tim Cook needs to come out on that conference call, and they need to give a reason why. And look, the WWDC event was great, but they need to give a reason why people should upgrade to the next phone. And they should be very clear about what the Sirius system is going to be and how it's going to benefit people.
I think they need their TikTok of AI in terms of the app, and they don't have that yet. But if they had that right now, it'd be a hell of a sell, right?
If you get that narrative going, and the narrative about how this is going to benefit the consumer, this becomes the next best thing since sliced bread, and you'll see Apple at $250 by Easter of next year.
Yes, because you agree with me. There still is no real consumer use case on this iPhone. We're hoping there will be one, but as of now, no one really knows what it is besides like making.
I mean, I have a 14 Plus, and I don't believe that my phone is able to utilize the Apple Intelligence platform. I have no reason to upgrade at this point.
Yeah.
Until they give me a reason to upgrade, I'm not going to think about it unless my battery really goes on the fritz. That would be the only reason I upgrade. But yeah, I think that there's a lot of people that are looking at it the way I'm looking at it. So you need to give all those people a reason. That way you jumpstart the upgrade cycle. And you jumpstart the upgrade cycle, you're going to get upgrades, you're going to get everybody talking about it, you're going to have a different narrative around it. And anybody who's been conservative or constructive on the name will probably change their tune.
All right. Steve's Twitter is in the chat. We got Zucks on in a minute. Thank you, Steve, for joining. Appreciate your thoughts.
Talk to you later.
Talk later.
All right, bye.
All right, folks. We got Zucks now in a minute, and we'll see what he says. Meta currently 496, up 4.46%. Zucks will be speaking, and we'll see if he gives any more clarity on these numbers and see what happens. All right, should be starting pretty soon. This is the time where we listen to elevator music together, like we've been doing for the past couple of days. Meta right now up 4.42, 495. Let's see if we can break back above 500. S&P is at 550, IWM 223, SoFi 756, Snapchat up 3.68%, 1381. Snapchat likes it. Bitcoin's still tanking, dude. It really feels geopolitically. Bitcoin's down 2%. But Bitcoin's the one taking the real hit right now. All right, we should have Zucks starting pretty soon. ARM is down 8%. ARM is still down. 507.50 by call end. Let's see. Let's see what we've got. Apple can promise AI doesn't mean their device can do it. It would drain the battery. Well, that's why Innovix is important, right? And one of the reasons Innovix matters is to handle AI at the edge on the device itself. Will HUD tank due to Bitcoin tomorrow? I would imagine it could, but if it's not tanking after hours, none of the Bitcoin stocks are tanking, dude. It's really weird. Like, none of them. All right, here we go.
Good afternoon. My name is Krista, and I will be your conference operator today. At this time, I would like to welcome everyone to the Meta second quarter earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. To withdraw your question, again, press star 1. We ask that you limit yourself to one question. This call will be recorded. Thank you very much. Kenneth Dorell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta Platforms' second quarter 2024 earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
All right, thanks, Ken. And hey, everyone, thanks for joining today. This was a strong quarter for our community and business. We estimate that there are now more than 3.2 billion people using at least one of our apps each day. The growth we're seeing here in the U.S. has especially been a bright spot. WhatsApp now serves more than 100 million monthly actives in the U.S., and we're seeing good year-over-year growth across Facebook, Instagram, and Threads as well, both in the U.S. and globally. I'm particularly pleased with the progress that we're making with young adults on Facebook. The numbers we're seeing, especially in the U.S., really go against the public narrative around who's using the app. A couple of years ago, we started focusing our apps more on 18 to 29-year-olds, and it's good to see that those efforts are driving good results. Another bright spot is Threads, which is about to hit 200 million monthly actives. We're making steady progress towards building what looks like it's going to be another major social app. And we're seeing deeper engagement, and I'm quite pleased with the trajectory here. The big theme right now is, of course, AI, and I'll focus my comments today on three areas. What AI means for our family of apps and core business, what new AI experiences and opportunities we see, and how AI is shaping our metaverse work. So let's start. Across Facebook and Instagram, advances in AI continue to improve the quality of recommendations and drive engagement. And we keep finding that as we develop more general recommendation models, content recommendations get better. In this quarter, we rolled out our full-screen video player and unified video recommendation service across Facebook, bringing Reels, longer videos, and Live into a single experience. And this has allowed us to extend our unified AI systems, which had already increased engagement on Facebook Reels more than our initial move from CPUs to GPUs did. Over time, I'd like to see us move towards a single unified recommendation system that powers all of the content, including things like people you may know, across all of our surfaces. We're not there yet, So there's still upside, and we're making good progress here. AI is also going to significantly evolve our services for advertisers in some exciting ways. It used to be that advertisers came to us with a specific audience they wanted to reach, like a certain age group, geography, or interests. Eventually, we got to the point where our ad systems could better predict who would be interested than the advertisers could themselves. But today, advertisers still need to develop creative themselves. And in the coming years, AI will be able to generate creative for advertisers as well, and will also be able to personalize it as people see it. Over the long term, advertisers will basically just be able to tell us a business objective and a budget, and we're going to go do the rest for them. We're going to get there incrementally over time, but I think this is going to be a very big deal. Moving on to some of the brand new experiences that AI enables. Last quarter, we started broadly rolling out our assistant, Meta AI, and it is on track to achieve our goal of becoming the most used AI assistant by the end of the year. We have an exciting roadmap ahead of things that we want to add, but the bottom line here is that Meta AI feels like it is on track to be an important service, and it's improving quickly, both in intelligence and features. Some of the use cases are utilitarian, like searching for information or role-playing difficult conversations before you have them with another person. And other uses are more creative, like the new Imagine Yourself feature that lets you create images of yourself doing whatever you want in whatever style you want. And part of the beauty of AI is that it's general. So we're still uncovering the wide range of use cases that it's valuable for. An important part of our vision is that we're not just creating a single AI, but enabling lots of people to create their own AIs. And this week, we launched AI Studio, which lets anyone create AIs to interact with across our apps. I think that creators are especially going to find this quite valuable. There are millions of creators across our apps, and these are people who want to engage more with their communities, and their communities want to engage more with them, but there are only so many hours in the day. So now they're going to be able to use AI Studio to create AI agents that can channel them to chat with their community, answer people's questions, create content, and more. So I'm quite excited about this. But this goes beyond creators too. Anyone is going to be able to build their own AIs based on their interests or different topics that they are going to be able to engage with or share with their friends. Business AIs are the other big piece here. We're still in alpha testing with more and more businesses. The feedback we're getting is positive so far. Over time, I think that just like every business has a website, a social media presence, and an email address, in the future, I think that every business is also going to have an AI agent that their customers can interact with. And our goal is to make it easy for every small business, eventually every business, to pull all of their content and catalog into an AI agent that drives sales and saves them money. When this is working at scale, I think that this is going to dramatically accelerate our business messaging revenue. There are a lot of other new opportunities here that I'm excited about too, but I'll save those for another day when we're ready to roll them out. The engine that powers all these new experiences is the Llama family of foundation models. And this quarter, we released Llama 3.1, which includes the first frontier-level open source model, as well as new and industry-leading small and medium-sized models. The 405 billion model has better cost performance relative to the leading closed models, and because it's open, it is immediately the best choice for fine-tuning and distilling your own custom models of whatever size you need. I think we're going to look back at Llama 3.1 as an inflection point in the industry, where open source AI started to become the industry standard, just like Linux is. I often get asked why I'm so bullish on open source. I wrote a letter along with the Llama 3.1 release explaining why I believe that open source is better for developers, for Meta, and for the world more broadly. My view is that open source will be safer, will enable innovation that improves all of our lives faster, and will also create more shared prosperity. For Meta's own interests, we're in the business of building the best consumer and advertiser experiences. And to do that, we need to have access to the leading technology infrastructure and not get constrained by what competitors will let us do. But these models are ecosystems. They're not just kind of isolated pieces of software that we can develop by ourselves. So if we want the most robust ecosystem of tools, efficiency improvements, silicon optimizations, and other integrations to develop around our models, then we need them to be widely used by developers across the industry. And once we know that we're going to have access to the leading models, then I'm confident that we're going to be able to build the best social and advertising experiences. Part of why I'm so optimistic about this is that we have a long track record of success with open source. We've saved billions of dollars with Open Compute Project by having supply chains standardized on our infra designs. Open sourcing tools like PyTorch and React has led to real benefits for us from all of the industry's contributions. This approach has consistently worked for us, and I expect it will work here too. Another major area of focus is figuring out the right level of infra capacity to support training more and more advanced models. Llama 3 is already competitive with the most advanced models, and we're already starting to work on Llama 4, which we're aiming to be the most advanced in the industry next year. We are planning for the compute clusters and data we'll need for the next several years. The amount of compute needed to train Llama 4 will likely be almost 10 times more than what we used to train Llama 3, and future models will continue to grow beyond that. It's hard to predict how this will trend multiple generations out into the future, but at this point, I'd rather risk building capacity before it is needed rather than too late, given the long lead times for spinning up new infra projects. And as we scale these investments, we're of course going to remain committed to operational efficiency across the company. The last area that I want to discuss is how AI is shaping our metaverse work, which continues to be our other long-term focus. Last quarter, I discussed how advances in AI have pulled in the timelines for some of our products. A few years ago, I would have predicted that holographic AR would be possible before smart AI, but now it looks like those technologies will actually be ready in the opposite order. We're well positioned for that because of the Reality Labs investments that we've already made. Ray-Ban Meta glasses continue to be a bigger hit sooner than we expected, thanks in part to AI. Demand is still outpacing our ability to build them, but I'm hopeful that we'll be able to meet that demand soon. Essilor-Luxottica has been a great partner to work with on this, and we are excited to team up with them to build future generations of AI glasses as we continue to build our long-term partnership. Quest 3 sales are also outpacing our expectations, and I think that's because it is not just the best MR headset for the price, but it's the best headset on the market, period. In addition to gaming, people are increasingly taking advantage of Quest's capabilities as a general computing platform, spending time watching videos, browsing websites, extending their PC via virtual desktop, and more. Horizon also continues to grow across VR, mobile, and desktop, and I expect that it will become an increasingly important part of that ecosystem as well. We're hosting our annual Connect conference on September 25th, and we will have lots of exciting updates around all of our AI and metaverse work, so I encourage you to tune into that. At the end of the day, we are in the fortunate position where the strong results that we're seeing in our core products and business give us the opportunity to make deep investments for the future. And I plan to fully seize that opportunity to build some amazing things that will pay off for our community and our investors for decades to come. The progress we're making on both the foundational technology and product experiences suggests that we're on the right track. I'm proud of what our team has accomplished so far, and I'm optimistic about our ability to execute on the opportunities ahead. As always, thank you to our teams who are pushing all of this important work forward, and thanks to all of you for being on this journey with us. And now here is Susan.
Great opening statement.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis, unless otherwise noted. Q2 total revenue was
Okay, this is going to be the boring part, just about finances, but overall, amazing statement by Zucks. Q&A should be good, but he crushed it, and he explained what the kind of vision is for the company going forward.
$24.2 billion, up 7% compared to last year. In terms of the specific line items, cost of revenue increased 23%, driven primarily by higher infrastructure and Reality Labs inventory costs. R&D increased 13%, primarily driven by higher headcount-related expenses and infrastructure costs, which were partially offset by lower restructuring costs. Marketing and sales decreased 14%, due mainly to lower restructuring and headcount-related costs. G&A decreased 12%, mostly due to lower legal-related expenses. We ended the first quarter with almost 70,800 employees, up 2% from Q1. Second quarter operating income was $14.8 billion, representing a 38% operating margin. Our tax rate for the quarter was 11%. Net income was $13.5 billion, or $5.16 per share. Capital expenditures, including principal payments on finance leases, were $8.5 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $10.9 billion. We repurchased $6.3 billion of our Class A common stock and paid $1.3 billion in dividends to shareholders, ending the quarter with $58.1 billion in cash and marketable securities and $18.4 billion in debt. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow, with approximately 3.27 billion people using at least one of our Family of Apps on a daily basis in June. Q2 total Family of Apps revenue was $38.7 billion, up 22% year over year. Q2 Family of Apps ads revenue was $38.3 billion, up 22% or 23% on a constant currency basis. Within ad revenue, the online commerce vertical was the largest contributor to year-over-year growth, followed by gaming and entertainment and media. On a user geography basis, ad revenue growth was strongest in Rest of World and Europe at 33% and 26% respectively. Asia Pacific grew 20% and North America grew 17%. On an advertiser geography basis, total revenue growth continued to be strongest in Asia Pacific at 28%, though growth was below the first quarter rate of 41% as we lapped a period of stronger demand from China-based advertisers. In Q2, the total number of ad impressions served across our services and the average price per ad both increased 10%. Impression growth was mainly driven by Asia Pacific and Rest of World. Pricing growth was driven by increased advertiser demand, in part due to improved ad performance. This was partially offset by impression growth, particularly from lower monetizing regions and surfaces. Family of Apps other revenue was $389 million, up 73%, driven primarily by business messaging revenue growth from our WhatsApp business platform. We continue to direct the majority of our investments toward the development and operation of our Family of Apps. In Q2, Family of Apps expenses were $19.4 billion, representing approximately 80% of our overall expenses. Family of Apps expenses were up 4%, mostly due to higher infrastructure and headcount-related expenses, which were partially offset by lower restructuring costs. Family of Apps operating income was $19.3 billion, representing a 50% operating margin. Within our Reality Labs segment, Q2 was $353 million, up 28%, driven primarily by Quest headset sales. Reality Labs expenses were $4.8 billion, up 21% year over year, driven mainly by higher headcount-related expenses and Reality Labs inventory costs. Reality Labs operating loss was $4.5 billion. Turning now to the business outlook. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. To deliver engaging experiences, we remain focused on executing our priorities, including video and in-feed recommendations. On Instagram, Reels engagement continues to grow as we make ongoing enhancements to our recommendation systems. Part of this work has been focused on increasing the share of original posts within recommendations so people can discover the best of Instagram, including content from emerging creators. Now, more than half of recommendations in the US come from original posts. On Facebook, we're seeing encouraging early results from the global rollout of our unified video player and ranking systems in June. This initiative allows us to bring all video types on Facebook into one viewing experience, which we expect will unlock additional growth opportunities for short-form video as we increasingly mix shorter videos into the overall base of Facebook video engagement. We expect the relevance of video recommendations will continue to increase as we benefit from unifying video ranking across Facebook and integrating our next-generation recommendation systems. These have already shown promising gains since we began using the new systems to support Facebook Reels recommendations last year. We expect to expand these new systems to support more surfaces beyond Facebook video over the course of this year and next year. We're also seeing good momentum with our longer-term engagement priorities, including generative AI and threads. People have used Meta AI for billions of queries since we first introduced it. We're seeing particularly promising signs on WhatsApp in terms of retention and engagement, which has coincided with India becoming our largest market for Meta AI usage. You can now use Meta AI in over 20 countries and 8 languages, and in the US, we're rolling out new features like Imagine Edit, which allows people to edit images they generate with Meta AI. Beyond generative AI, the Threads community also continues to grow and deepen their engagement as we ship new features and enhance our content recommendation systems. Now to the second driver of our revenue performance, increasing monetization efficiency. There are 2 parts to this work. The first is optimizing the level of ads within organic engagement. We continue to see opportunities to grow ad supply on lower monetizing surfaces like video, including within Facebook as the mix of overall video engagement shifts more to shorter videos over time, which creates more ad insertion opportunities. More broadly, we are continuing to get better at determining the best ads to show and when to show them during a person's session across both Facebook and Instagram. This is enabling us to drive revenue growth and conversions without increasing the number of ads, or in some cases, even reducing ad load. The second part of improving monetization efficiency is enhancing marketing performance. We continue to be pleased with our progress here, with AI playing an increasingly central role. We're improving ad delivery by adopting more sophisticated modeling techniques made possible by AI advancements, including our Meta Lattice ad ranking architecture, which continued to provide ad performance and efficiency gains in the second quarter. We're also making it easier for advertisers to maximize ad performance and automate more of their campaign setup with our Advantage Plus suite of solutions. We're seeing these tools continue to unlock performance gains, with a study conducted this year demonstrating 22% higher return on ad spend for U.S. advertisers after they adopted Advantage Plus shopping campaigns. Advertiser adoption of these tools continues to expand, and we're adding new capabilities to make them even more useful. For example, this quarter we introduced flexible format to Advantage Plus shopping, which allows advertisers to upload multiple images and videos in a single ad that we can select from and automatically determine which format to serve in order to yield the best performance. We have also now expanded the list of conversions that businesses can optimize for using Advantage Plus shopping to include an additional 10 conversion types, including objectives like add to cart. Looking forward, we believe generative AI will play a growing role in how businesses market and engage with customers at scale. We expect this technology will continue to make it easier for businesses to develop customized and diverse ad creatives. We've seen promising early results since introducing our first generative AI ad features, image expansion, background generation, and text generation, with more than 1 million advertisers using at least one of these solutions in the past month. In May, we began rolling out full image generation capabilities into Advantage Plus Creative, and we're already seeing improved performance from advertisers using the tool. Finally, we expect AI will help businesses communicate with customers more efficiently through messaging. We're starting by testing the ability for businesses to use AI in their chats with customers to help sell their goods and services and to generate leads. While we are in the early stages, we continue to expand the number of advertisers we're testing with and have seen good advances in the quality of responses since we began using Llama 3. Next, I would like to discuss our approach to capital allocation, which remains unchanged. We continue to invest both in enhancing our core experiences in the near term and developing technologies that we believe will transform how people engage with our services in the years ahead. We expect that having sufficient compute capacity will be central to many of these opportunities. So we are investing meaningfully in infrastructure to support our core AI work in content ranking and ads, as well as our generative AI and advanced research efforts. Our ongoing investment in core AI capacity is informed by the strong returns we've seen and expect to deliver in the future as we advance the relevance of recommended content and ads on our platform. While we expect the returns from generative AI to come in over a longer period of time, we are mapping these investments against the significant monetization opportunities that we expect to be unlocked across customized ad creative, business messaging, a leading AI assistant, and organic content generation. As we scale generative AI training capacity to advance our foundation models, we will continue to build our infrastructure in a way that provides us with flexibility in how we use it over time. This will allow us to direct training capacity to GenAI inference or to our core ranking and recommendation work when we expect that doing so would be more valuable. We will also continue our focus on improving the cost efficiency of our workloads over time. Reality Labs remains our other long-term initiative that we continue to invest meaningfully in. Quest 3 is selling well, and Ray-Ban Meta smart glasses are showing very promising traction, with the early signals that we are seeing across demand, usage, and retention increasing our confidence in the long-run potential of AR glasses. Finally, as we pursue these investments across near and long-term priorities, we will remain focused on operating the business efficiently. Turning now to the revenue outlook. We expect third quarter 2024 total revenue to be in the range of $38.5 to $41 billion. Our guidance assumes foreign currency is a 2% headwind to year-over-year total revenue growth based on current exchange rates. Turning now to the expense outlook. We expect full year 2024 total expenses to be in the range of $96.
She went out for me. Do you guys hear her? I don't hear her. Yeah, she went out for everybody. Is that just... No, I don't think that's just me. I think that's everybody. She went out. That's not good. I will try refreshing it. I don't know if that changes anything. Let me see. Reload.
With our expanded infrastructure footprint. Turning now to the CapEx outlook. We anticipate our full year 2024 capital expenditures will be in the range of $37 to $40 billion, updated from our prior range of $35 to $40 billion. While we continue to refine our plans for next year, we currently expect significant CapEx growth in 2025 as we invest to support our AI research and our product development efforts. On to tax. Absent any changes to our tax landscape, we expect our full year 2024 tax rate to be in the mid-teens. In addition, we continue to monitor an active regulatory landscape, including the increasing legal and regulatory headwinds in the EU and the US that could significantly impact our business and our financial results. In closing, Q2 was another good quarter. We continue to execute well across our business priorities and have exciting opportunities in front of us to deliver more value to the people and businesses using our products around the world. With that, Krista, let's open up the call for questions.
All right, here we go.
We will now open the lines for a question and answer session. To ask a question, please press star one on your touch-tone phone. To withdraw your question, again, press star one. And please limit yourself to one question. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from the line of Brian Nowak from Morgan Stanley. Please go ahead.
Great. Thanks for taking my questions. I have two, one for Mark, one for Susan. Mark, I wanted to sort of go back to some of the new generative AI-enabled use cases for users and advertisers. You talked about Meta AI, Studio, chatbots, diffusion models. If you could just sort of hone in on one or two of those that you're most excited about, where you're seeing good signal that could be a real driver for the business in 25, 26, just so we sort of know, where are you most focused on all those opportunities, and be helpful. And the second one, Susan, you have a lot of CapEx priorities from building new infrastructure for next generation models, compute capacity. Just walk us through again on the CapEx philosophy and any guardrails you have around ensuring you generate a healthy return on invested capital for investors from all the CapEx. Thanks.
I can take the first one. So I think the things that will drive the most results in 25 and 26 are actually the first category of things that I talked about in my comments, which are the ways that AI is shaping the existing products. So the ways that it's improving recommendations and helping people find better content, as well as making the advertising experiences more effective. I think that there's a lot of upside there. Those are already products that are at scale. The AI work that we're doing is going to improve that. It'll improve the experience and the business results. The other areas that we're working on, I mean, I think you all know this from following our business for a while, but we have a relatively long business cycle of starting a new product, scaling it to something that reaches 1 billion people or more, and only then really focusing on monetizing at scale. So, realistically, for things like Meta AI or AI Studio, I mean, these are things that I think will increase engagement in our products and have other benefits that will improve the business and engagement in the near term. But before we're really talking about monetization of any of those things by themselves, I mean, I don't think that anyone should be surprised that I would expect that will be years, right? I think that that's like what we've seen with Reels. It's what we saw with all of these things. But I think, for those who have followed our business for a long time, you can also get a pretty good sense of when things are going to work years in advance. And I think that the people who bet on those early indicators tend to do pretty well, which is why I wanted to share in my comments the early indicator that we had on Meta AI, which is, I mean, look, it's early. Last quarter, I think had just started rolling it out a week or two before our earnings call. This time, we're a few months later, and what we can say is I think we are on track to achieve our goal of being the most used AI assistant by the end of this year. And I think that's a pretty big deal. Is that the only thing we want to do? No. I mean, we obviously want to kind of grow that and grow the engagement on that to be a lot deeper, and then we'll focus on monetizing it over time. But the early signals on this are good, and I think that that's kind of all that we could reasonably have insight into at this point. But I do think that part of what's so fundamental about AI is it's going to end up affecting almost every product that we have in some way. It will improve the existing ones and will make a whole lot of new ones possible. So it's why there are all the jokes about how all the tech CEOs get on these earnings calls and just talk about AI the whole time. It's because it's actually super exciting, and it's going to change all these different things over multiple time horizons.
And Brian, I can take the second question. On the ROI part of your question, I would broadly characterize our AI investments into two buckets, core AI and Gen AI. And the two are really at different stages as it relates to driving revenue for our businesses and our ability to measure returns. On our core AI work, we continue to take a very ROI-based approach to our investment here. We're still seeing strong returns as improvements to both engagement and ad performance have translated into revenue gains, and it makes sense for us to continue investing here. Gen AI is where we're much earlier, as Mark just mentioned in his comments. We don't expect our Gen AI products to be a meaningful driver of revenue in 24, but we do expect that they're going to open up new revenue opportunities over time that will enable us to generate a solid return off of our investment while we're also open sourcing subsequent generations of Llama. And we've talked about the 4 primary areas that we're focused here on: the Gen AI opportunities to enhance the core ads business, to help us grow in business messaging, the opportunities around Meta AI, and the opportunities to grow core engagement over time. The other thing I would say is we're continuing to build our AI infrastructure with fungibility in mind so that we can flex capacity where we think it will be put to best use. The infrastructure that we build for Gen AI training can also be used for Gen AI inference. We can also use it for ranking and recommendations by, making certain modifications like adding general compute and storage. And we're also employing a strategy of staging our data center sites at various phases of development, which allows us to flex up to meet more demand and less lead time if needed, while limiting how much spend we're committing to in the outer years. So, while we do expect that we are, going to grow CapEx significantly in 2025, we feel like we have a good framework in place in terms of thinking about where the opportunities are and making sure that we have the flexibility to deploy it as makes the most sense.
Meta's not tanking after they said we're not going to monetize for
Your
years.
next question comes from the line
Go
of
up.
Mark Shmulik with Bernstein. Please go ahead.
Yes, hi. Thanks for taking the question. Just as we look at the revenue guidance and the outlook, Susan, any color you can share in just kind of the state of the overall digital ad market, and you've highlighted some areas where you're seeing strength, versus kind of some of the idiosyncratic efforts you've made to kind of improve the efficacy of the ad product. Thank you.
Hi, Mark. We're continuing to see healthy global advertising demand, and we're also delivering, ongoing ad performance improvements just related to all of the investments that we've continued to make over time and improving these sort of ads, targeting, ranking, delivery, all of the fundamental infrastructure there. And we expect that all of that will continue to benefit ad spend in Q3. We do expect, year-over-year growth to slow in Q3 as we are lapping, strong growth from China-based advertisers, as well as strong Reels impression growth from a year ago. And we also expect modestly larger FX headwinds in Q3 based on current rates.
Your next question comes from the line of Eric Sheridan with Goldman Sachs. Please go ahead.
Thank you so much for taking the question. I'll just ask one. You called out building community size in WhatsApp in the United States, as well as Threads. How are you thinking about those newer, faster growing elements of either messaging or Threads as a platform, and the mix between the potential for engagement growth and overall monetization longer term of either the messaging layer or Threads, and what you're most excited about there to build to sort of capitalize on scale, but bring it back towards monetization? Thank you.
I can start, and Susan can jump in if she has anything else that she wants to add. So the WhatsApp stat, I think, is really important as a business trend, just because the United States punches above its weight in terms of, it's such a large percent of our revenue. So before, WhatsApp was sort of the leading messaging app in many countries around the world, but not in the U.S. And I think now that we're starting to make inroads into leading in the U.S., as more and more people use the product and realize that, hey, this is a really good experience, the best experience for cross-platform communication and groups and all these different things, I think that's going to just mean that all of the work that we're doing to grow the business opportunity there over time is just going to have a big tailwind if the U.S. ends up being a big market. So I think that's one reason why it's really relevant. It's obviously also personally somewhat gratifying to see all the people around us starting to use WhatsApp. So I think that's pretty fun, but maybe somewhat less relevant from a business perspective. Threads, I think, it's another example of something that it got off to about as good of a start of any app that I can think of. I think it was the fastest growing app to 100 million people, and it's a good reminder that even when you have that start, the path from there to 1 billion people using an app is still multiple years. And that's our product cycle. And I think that's something that is a little bit different about Meta in the way we build consumer products and then business around them than a lot of other companies that ship something and start selling it and making revenue from it immediately. So I think that's something that that our investors and folks thinking about analyzing the business have needed to always grapple with is all these new products we ship them, and then there's a multi-year time horizon between scaling them and then scaling them into not just consumer experiences but very large businesses. But the thing that I think is just super exciting about Threads is that we've been building this company for 20 years, and there just are not that many opportunities that come around to grow a billion-person app. I mean, there are I don't know, maybe a dozen of them in the world or something, right? I mean, there are certainly more of them outside the company than inside the company, but we do pretty well. And being able to add another one to the portfolio if we execute really well on this is just really exciting to have that potential. Now, obviously, there's a ton of work between now and there, and we're almost at 200 million, so it's a really good milestone. I'm excited about that. A lot of work between this and it being a large part of the business, but I do think that these kind of opportunities are pretty rare, and that's something that we're just really excited about. I think the team is doing great work on it.
Eric, I would just add to that in terms of nearer term sources of impression growth. We really expect that video is going to remain a source of impression growth for us in the second half. On Instagram, we expect Reels to continue to drive growth, while on Facebook, we expect to grow overall video time while increasing the mix of short form video, which creates more impression growth opportunities. And generally, we expect continued community growth across our apps.
Your next question comes from the line of Doug Anmuth with J.P. Morgan. Please go ahead.
Great. Thanks for taking the questions. One for Mark, one for Susan. Mark, just in terms of infrastructure and CapEx, you've talked about currently building out not just for Llama 3 and 4, but really out to 7 perhaps, and then Llama 4, 10x the compute required versus Llama 3. Just given how much you're building ahead, how does that influence the shape of the CapEx curve over a multi-year period? And then, Susan, if you could talk a little bit more about the 3Q outlook. I know you're talking about tougher comps, but at the same time, it really suggests only a point of FX neutral decel at the high end. So just curious if there's anything else you can point to more specifically that's driving the expected strength here. Thanks.
Thanks, Doug. I can go ahead and talk about both of those. So your first question was sort of about the longer term, CapEx outlook. We haven't really, shared an outlook sort of on the longer term CapEx trajectory. In part, infrastructure is a extraordinarily dynamic planning area for us right now. We're continuing to work through, what the scope of the Gen AI roadmaps, will look like over that time. Our expectation, obviously, again, is that we are going to significantly increase our investments in AI infrastructure next year, and we'll give further guidance as appropriate. But we are building, all of that CapEx again with the factors in mind that I talked about previously, thinking about, both how to build it flexibly so we can deploy to core AI and Gen AI use cases as needed. And making sure that we both feel good about the returns that we're seeing on the core AI investments, which we're able to measure more immediately, and that we feel good about the opportunities in the Gen AI efforts. Your second question was about the Q3 revenue outlook. Again, I mentioned this earlier. We have seen healthy global advertising demand on our platform. We're delivering, ongoing ad performance improvements, which again we feel like is the result of many quarters of effort, that have accrued and will continue to accrue value to our platform. We saw basically in Q2, where revenue grew 22%, that there was broad-based strength across regions and verticals, including particular strength among smaller advertisers, and we expect that, generally to continue into Q3.
Your next question comes from the line of Justin Post with Bank of America. Please go ahead.
Great. Thank you. I just want to get back to the comment on U.S. young adult user growth, especially maybe on Facebook and Instagram. I know you made a big change with Reels a couple of years ago, but what are those users doing on Facebook and Instagram? And can you give us any quantification of the usage growth? Thank you.
They're sending Reels.
Thanks, Justin. So building products with young adults in mind has been a core priority area for the Facebook team in recent years, and we've been very encouraged to see these efforts translate into engagement growth. With this cohort, we've seen healthy growth in young adult app usage in the U.S. and Canada for the past several quarters, and we've seen that products like Groups and Marketplace have seen particular traction with young adults. Posting to groups in the US and Canada has been growing. That's been boosted mainly by young adults. We also see that they are active users of Marketplace, which has benefited from product improvements and strong demand for secondhand products in the US.
Your next question comes from the line of Mark Mahaney with Evercore ISI. Please go ahead.
Yeah, I was going to ask about Marketplace, so that's a nice segue. It's a great, somewhat under-monetized or arguably very under-monetized asset. I know you indirectly monetize it, but it's a very large marketplace. It may even be bigger than eBay. Your thoughts on what you may want to do in the future in terms of monetizing it, in part maybe even improve the quality of the marketplace? And then secondly, I just want to ask you about headcount. It's down about 1% year over year. You're pretty much back at par with where the employee headcount was prior to significant reduction. Should we think about headcount growth going forward? You talk about a significant growth in CapEx. Should we expect a moderate growth in headcount? Significant? Any thoughts on that would be helpful. Thank you.
Thanks, Mark. On your first question, about Marketplace, again, we're obviously excited that it's been one of the drivers of strength in young adults. I would probably just say that more generally, Marketplace is one prong in a broader commerce strategy that we have, which continues to be focused on basically creating the best shopping experience on our platform. Marketplace is obviously consumer oriented. The broader part of the commerce strategy is about making it easier for businesses to advertise their products, for buyers to find and purchase relevant items on our platform. And to that end, I would say that, we feel quite happy with also the investments we've been making in Shops ads. Shops ads revenue is growing at a strong year-over-year pace. We're seeing Shops ads drive incremental performance for advertisers, and it's also working well in combination with some of our other products like Advantage Plus shopping. Your second question was about headcount. We continue to be disciplined about where we're allocating new headcount to ensure that it's really focused on our core company priorities. But we're also working down a prior hiring underrun. And as we further close that hiring underrun over the course of this year, I do expect that we will end 2024 with in-seat reported headcount that is meaningfully higher than where we ended 2023. We aren't providing sort of 2025 headcount growth expectations yet, as we haven't started our budgeting process yet. But again, I expect that we will primarily target our hiring to focus on priority areas, and we will be, running a very disciplined headcount process.
Your next question comes from the line of Youssef Squali with Truist Securities. Please go ahead.
Great, thank you very much. So the AI assistant using Llama 3.1 has been incorporated in different variations and looks really impressive and seems to be getting closer to becoming a full search engine for virtually everything except for commercial queries so far. So are there any plans to open it up to the broader web, kind of like what maybe OpenAI is alpha testing, maybe link it to third-party marketplaces for commercial search, etc.? And then on Ray-Bans, can you maybe talk a little bit more about the opportunity to deepen your relationship with EssilorLuxottica? What would that look like? What kind of areas are the most exciting to you, Mark, in that relationship? Thank you.
Yeah, so I'm very excited with how Llama 3.1 landed. I think the team there is doing really great work. Going from the first version of Llama to Llama 2 last year, there was a generation behind the frontier to now Llama 3.1, which is basically competitive and in some ways leading the other top closed models. Meta AI uses a version of Llama 3.1, as well as a bunch of other services that we've built to kind of build a cohesive product. And when I was talking before about we have the initial usage trends around Meta AI, but there's a lot more that we want to add. Things like commerce and you can just go vertical by vertical and build out specific functionality to make it useful in all these different areas. Or eventually, I think what we're going to need to do to make this just as to fulfill the potential around just being the ideal AI assistant for people. So it's a long roadmap. I don't think that this stuff is going to get finished in the next couple of quarters or anything like that. But this is part of what's going to happen over the next few years as we build something that will, I think, just be a very widely used service. So I'm quite excited about that. And we're going to continue working on Llama too. So, I mean, you mentioned Llama, and I think the question was a little more about Meta AI, but they're both, I mean, they're related. Llama is sort of like the engine that powers the product, and it's open source, and I'm just excited about the progress that we're making on both of those. On the smart glasses, EssilorLuxottica is a great partner. We are now on the second generation of the Ray-Ban Meta glasses. They're doing well, better than I think we had expected, and we expected them to grow meaningfully from the first generation. So that's been a very positive surprise, and I think part of that is that it's just well positioned to dovetail well with the AI revolution that we're seeing and offering all kinds of new functionality there. So that was great. But EssilorLuxottica is a great company that has a lot of different products that we hope to be able to partner with to just continue building new generations of the glasses and deepen the AI products and make it better and better. I think there's a lot more to go from here, and it's compared to what we thought at this point, it's doing quite well compared to I think what it needs to be like a really leading piece of consumer electronics. I think we're still early, but all the signs are good.
Your next question comes from the line of Ron Josey with Citi. Please go ahead.
Great. Thanks for taking the question. I wanted to get back, Mark, to the comments around open source and Llama 3, and totally understand that Meta is not offering a public cloud. And so what I wanted to hear from you is maybe a little bit more on the product vision of products that come out of Llama 3 and meaning potentially offering some of these products to other companies, call it for customer service or call center offerings or other verticals. And so any insights on just how you envision maybe the open source and Llama 3.1 can sort of offer greater enterprise services for others to benefit from? Thank you.
So Llama is the foundation model that people can shape into all kind of different products. So whether it's Meta AI for ourselves, or the AI Studio, or the business agents, or like the assistant that's in the Ray-Ban glasses, like all these different things are basically products that have been built with Llama. And similarly, any developer out there is going to be able to take it and build a whole greater diversity of different things as well. Like I talked about, I think the reason why open sourcing this is so valuable for us is that we want to make sure that we have the leading infrastructure to power the consumer and business experiences that we're building. But the infrastructure, it's not just a piece of software that we can build in isolation. It really is an ecosystem with a lot of different capabilities that other developers and people are adding to the mix, whether that's new tools to distill the models into the size that you want for a custom model, or ways to fine-tune things better, or make inference more efficient, or all different other kinds of methods that we haven't even thought of yet, the silicon optimizations that the silicon companies are doing, all this stuff. It's an ecosystem. So we can't do all that ourselves. And if we built Llama and just kind of kept it within our walls, then it wouldn't actually be as valuable for us to build all the products that we're building as it's going to end up being. So I think that's the business strategy around that. And that's why we don't feel like we need to necessarily build a cloud and sell it directly in order for it to be a really positive business strategy for us. And part of what we're doing is working closely with AWS. I think especially did great work for this release. Other companies like Databricks, NVIDIA, of course, other big players like Microsoft with Azure and Google Cloud. They're all supporting this, and we want developers to be able to get it anywhere. I think that's one of the advantages of an open source model like Llama is it's not like you're locked into one cloud that offers that model, whether it's, Microsoft with OpenAI or Google with Gemini or whatever it is, you can take this and use it everywhere. And we want to encourage that. So, I'm quite excited about that. The enterprise and business applications that we're going to be most focused on, though, in addition to just optimizing the advertiser experience, like I talked about in my comments earlier, it is the business agent piece. It's I just think that there's a huge potential. Like I said earlier, I think pretty much every business today, it has an email address, they have a website, they have social media accounts. I think in the future they're going to have at least one, if not multiple, business agents that can do the whole range of things, from interacting to help people buy things to helping support the sales that they've done, if they have issues with the products, if they need to get in touch with you for something. And we already see people interacting with businesses over messaging working quite well in countries that have low cost of labor. But the thing is that in order to have someone answering everyone's questions is quite expensive in a lot of countries. And I think that this is like a thing that AI, I think, is just going to be very well suited towards doing. And when we can make that easy for the hundreds of millions of businesses that use our platforms to pull in all their information and their catalogs and their history and all the content that they've shared, and really just quickly stand up an agent, I think that's going to be awesome. So we can combine Llama with a lot of custom work that we're doing on our business teams, and couple that with all the other investment that the rest of the ecosystem is doing to make Llama good. And I think that's going to be huge. But that's just one area. I mean, this really goes across all of the different products that we're building, both consumer and business. So it's a lot of exciting stuff.
Krista, we have time for one last question.
Thank you. That question will come from the line of Ross Sandler with Barclays. Please go ahead.
Great. Mark, so on Monday in your interview with Jensen, you said something along the lines of if scaling ended up stopping one day, you'd have 5 years of product work to do and ahead of you. So outside of agents or AI assistants, what other areas in AI are you thinking about or looking at in that 5-year roadmap? And then the second question is maybe one more stab at the capacity question. You guys said that Llama 3 the 3.1 was trained on 16,000 H100s. You've also said that you're going to have 600,000 available by year end. So even if we kind of go up to 160,000 GPUs for Llama 4, we have plenty of extra capacity for inference and future products. I guess, how are you guys modeling out this entire kind of CapEx roadmap between training, inference, and future things? That's all. Thanks a lot.
Good questions.
I can start with the first one, and then I'll let Susan answer the second one. It's an interesting question. It's a little hypothetical because I do think it's true that if, let's say, there were no future foundation models, I think there would just be a huge amount of product innovation that the industry would bring to bear, and that just takes time. But then at the same time, there are going to be future foundation models, and they're going to be awesome and unlock new capabilities, and we're planning our products around those. So I'm not really planning our product roadmap assuming that there isn't future innovation. To the contrary, we are planning what's going to be in Llama 4 and Llama 5 and beyond, based on what capabilities we think are going to be most important for the roadmap that I just laid out. For having the breadth of utility that you're going to need in something like Meta AI, making it so that businesses and creators and individuals can stand up any kind of AI agents that they want, that you're going to have these kind of real-time multimodal glasses with you all the time that will just be increasingly useful for all the things that you're doing. And that, I guess this kind of dovetails with what I'd expect Susan to talk about next. And we do have this huge set of use cases already about people wanting to discover content and interact with their friends, and businesses reaching people, and all that stuff is getting better with this too. So I guess my point there was, it's just, there's some lag between a technology becoming available and the products becoming kind of fully explored in the space. And I just think that was kind of my way of saying that I think that this is just a very exciting area where there's just going to be a lot of innovation for a long time to come. I'll let Susan take a stab at the numbers around the GPUs and all that.
Thank you. We are clearly, in the process of building out a lot of capacity. And Mark, has alluded to that in his comments about, what we have needed to train prior generations and the next generation of Llama. And we are, and that's driving sort of what we've talked about in terms of the significant growth in CapEx in 2025. And we aren't really, in the position now to share a longer term outlook. When we think about sort of any given new data center project that we're constructing, we think about how we will use it over the life of the data center. We think about the amount of capacity we would use in terms of training whatever the subsequent generations of Llama are, and it's architected around that. But then we also look at how, we might use it, several years into its lifetime towards other use cases across our core business, across what we think might be future needs for inference for generative AI-based products. So there's sort of a whole host of use cases for the life of any individual data center, ranging from Gen AI training at its outset to potentially supporting Gen AI inference to being, used for core ads and content ranking and recommendation, and also thinking through the implications too of what kinds of servers we might use to support those different types of use cases. So, we are really mapping across a wide range of potential use cases when we undertake any given project. And, we're really doing that with both a long time horizon in mind, again, because of the long lead times in spinning up data centers, but also recognizing that there are multiple decision points in the lifetime of each data center in terms of thinking through when to order servers and, what servers to order and, what you'll put them towards. And that gives us flexibility to make the sort of best decisions based on the information we have in the future.
Great. Thank you all for joining us today. We appreciate your time, and we look forward to speaking with you again soon.
This concludes today's conference call.
All right, folks, there you go. That is Zucks with an incredible earnings call. In my opinion, that was absolutely exceptional. That was great. That was great. So yeah, last answer on CapEx, they were a bit scared to answer that one. You could even tell with the hesitation. Even the laugh she did, like right before she got into the answer, it was one of those laughs like, I don't know how the fuck I'm going to answer this, but let's see what I can do. Overall, I thought the call was phenomenal. So I thought there were a couple key points I want to focus on, but right here, Meta 506, 6.73%. I mean, dude, good earnings, good quarter. We already talked about the numbers. Numbers were exceptional. And the street is going the opposite of Microsoft and Google, and they're showing them some love because they answered the questions in the right way. So 3 things I got from that call that I want to talk about, and then we'll end it for today. Number 1, and most importantly, Zucks was very blunt with investors and said, hey, give us some time. So he flat out said, you're going to need to give Meta years. And he said the word years, meaning he's thinking probably 2026, 2027 to truly monetize AI. Now, what is Meta at its core? It's a business that's built on users, and user growth is the fuel of their business. And they're still growing users 7% year over year, even though everyone in the world has at least touched a Meta product to an extent. So he said, we don't scale products and really monetize them until we get to 1 billion people, which is why WhatsApp just started getting monetized, and Threads and Meta AI are nowhere close to 1 billion. Threads is getting up there. Meta, I don't think, is really even at 100 million yet, Meta AI, but it's going to take some time. So ironically, the stock did not tank on this news. If this was Microsoft or Google, we would have been down like 40% or something. It's almost like the street actually appreciated Zucks's honesty. They felt the authenticity in what he was saying. And that authenticity led to basically the street saying, okay, we'll give you the premium. We'll give you the multiple. We'll keep buying the stock as long as you're not like screwing with us here. And there's actually monetization. And the thing is, you can't really think they're messing around because the advertising revenue growth is up 20% year over year. It's been compounding 20% for the past 5-6 years. So it's not like they're not showing the benefit of GPUs and training on their core business, which is ads. Their argument is just like, hey, maybe Threads becomes a big advertising business, but until we have 1 billion users and until we figure out how AI can interact with text uniquely, right? Because AI advertising on videos and photos on Facebook is different in terms of the AI advertising experience on like posts that are primarily rooted in text. That's a whole different understanding of how the user will engage with those ads. AI will be a component of that, but they need to get to 1 billion users before that even results in any long-term growth. Same thing with Meta AI. I mean, I don't know how many people are using Meta AI. I use it here and there on WhatsApp and Instagram, but I don't even know if they're getting enough daily queries that rival something like GPT. I would imagine not yet. So until they really figure out those parts of the business, they don't want to monetize. Remember, if you've seen The Social Network, Zucks is the guy who told Eduardo, who was the co-founder, to basically fuck off. We're not going to put ads on the website. We're going to just keep scaling it, and eventually we'll monetize. And that ended up being the right decision. So I think the first thing that Zuck said, which was like a real part of the earnings call that mattered, which is that we are going to take our time and you've got to be patient with us, that was received well by the market. And I commend Zucks for doing that because he did what he needed to do in order to get the street to realize his kind of core argument. The Wall Street banker says the street liked that he gave concrete ways that AI will benefit them and drive a ton of revenue. They are right with every business on their apps having a chat platform like email. Zucks gave a vision. I agree. I think that last sentence right there, Zucks gave a vision that made sense in a world where everyone's trying to figure out what is the monetization of AI and what is the use case of AI. And even though Zucks probably doesn't fully understand it, he did give a vision that makes enough sense for now. Next thing, Llama 3.1, he said it's going good. It's the foundation model that's creating all of the current products that they're innovating on and the future products. He also said that Llama 3.1 is going to be rivaling some of the closed models. He spoke to the importance of open sourcing these models as it gives Meta a really unique competitive advantage to differentiate against everything else that is going on in the foundation model space. So the questions that were asked about Llama, I think Zucks killed it from that perspective. And he also explained why the unique 3.1 model that came out allows for training agents because of the context for parameters. So it's just one of the more powerful models that exists on the market. Now, the final thing I think Zuck said, which was at the end of the call that I really, really enjoyed, which was a question about, hey, what is on the horizon in terms of new AI initiatives? Like, what are you guys going to do to really prove that if foundation models stopped coming out today, Meta at 508, wow, it's up 7%. If there were no new models after 3.1, what would you guys work on over the next 5 years to really build out what you have to do? And Zuck said, I think he had a really good answer. He said, look, I would love if there were no new models, but the fact is there's going to be even bigger models in the future. If you believe in sort of the AGI thesis, there's going to be 100 trillion parameter models, not just 405 billion parameter models. So that's where we're going to see Zucks, Microsoft, Google, all of them try to duke it out and fight for supremacy. But his argument is, hey, if we have all these models, we have to innovate with Meta AI, Threads, WhatsApp monetization, AI advertising, etc., on top of those models in a specific way. So basically saying we need to orient our products around the rate of innovation of these models, because if you have a model on Meta AI that is outdated, even by a couple months, people are just not going to use it. They're going to go to ChatGPT, they're going to go to Gemini, they're going to go for the most real-time, relevant, accurate model. And Zucks basically said we are working on how our products interact with all those different foundation models, and the extent to which they can create new products rests on their ability to keep innovating on the foundation models, which brings us to the conversation around CapEx. Last question was, hey, you've got, 600,000 H100s. You've got plenty of extra capacity to train and do the inference training on the new products you build on top of the previous models. Do you really need to spend more? And that's where the CFO kind of, struggled to give guidance, because I think they're probably going to spend more. They did say in 2025 they're going to increase CapEx. They didn't give a specific number, but I think they know they're going to spend more. I think they know they have to spend more. I think they're afraid Microsoft and Google are going to spend way more than them, and they would rather spend more than spend less. And so although the street's not going to like that they're spending more, because at the end of the day, that hurts earnings per share, right? It hurts your bottom line when you have to spend more on CapEx. They still feel there is a reasonable ROI. They even said the word, we think we can get a reasonable return on this investment. They're not just spending $47 billion a year for no reason. 509 on Meta. Wow. So I thought this was a great earnings call. I thought they had a lot of strong answers. I thought they made the answers they needed to make. 508.55 right now on Meta. It was up 3%, 2.5% of the day, up 7%. IWM right now after hours is up 0.3%. Bitcoin Coming back a little bit, but Bitcoin still down from that $67,000 range. Robinhood is up a little bit. Coinbase is up a little bit. I'm really surprised Robinhood, Coinbase, and MicroStrategy are actually up, given Bitcoin took a tumble after hours. Snapchat, look at that. $14, up 5.2% because of Meta. But I think the street buys Meta tomorrow. I think they do. Where's NVIDIA? Oh, and the other argument was just like, hey, they're not stopping on CapEx. So this bad boy, NVIDIA, which is now $120. NVIDIA, if you include after hours, has added $340 billion of market cap in a day. This is the largest market cap gain in a day. Now, it doesn't feel that crazy because NVIDIA, it was at 120 for like a couple weeks, but it went to 100 yesterday. So it went from 100 to 120. Boom. You got 300 billion added to your market cap. NVIDIA now $2.88 trillion market cap on that 330 billion that was added today. So that is because of Zucks saying we're not going to stop spending. It's because of Microsoft spending $19 billion, because of Google spending $14 billion bucks. And then it's because of, I guess, investors realizing NVIDIA at $100 at 21 times 2025 EPS was stupid. So NVIDIA up another 3.1% after hours. Qualcomm, I don't know what happened. I don't know why they tanked. Now, granted, Qualcomm was up 9% of the day. So the fact that they're down 1% after hours, not that crazy. I know they were up 10%. I didn't listen to the call. I'll try to get into that and see what they said. But they're still up a lot for the day. So Qualcomm is down right now, but still an overall good day. And then the overall semi sector as well. Look at that. Pretty green after hours. AMD up about 0.5%, SMCI up 3%, Intel up 0.29%, ASML 0.35%, Taiwan Semi up 2% after being up 8% during the day. Dell up 1.29%. ARM is down 12%. We saw their numbers weren't amazing. They didn't increase guidance, so they're down 12%. And then Qualcomm's down 1.13%, but that's really not that big of a deal. So seems like Meta continued to help pump the market. This was one of the bigger tech names that needed to perform. They have performed now at $508. Meta stock year to date is 42%, up 42%. So trading back at that sort of core premium valuation that they were given a couple weeks ago. All right. That's what we got with Meta. Is it realistic for both IWM and QQQ to pump at the same time? Not really. Theoretically, the NASDAQ shouldn't fall, but the NASDAQ should consolidate for IWM to go up. I wouldn't expect them to pump at the same time. If they do, that's incredible, but I wouldn't expect that. They should be inverse, but one of them doesn't have to necessarily decline. One of them could stay stagnant while the other one starts to go higher. And then the NASDAQ for the day also had a great day. Tech, again, we fell 3.5% last week in a day. We fell almost 3% yesterday after hours. NASDAQ's up 2.96%. We're at 474. It's up another 0.66% after hours, up 3% in a day. I mean, dude, not bad. Zucks came. He did what he had to do. If you had Meta, congrats. If I had Meta, dude, I would be going long Meta. I would like Zucks really, really, really proved a vision. That doesn't mean the market can't get a little dicey in the next coming months with the election, rate cuts, all that stuff. But if you're a long-term investor, I don't know why anything in that earnings call would justify selling Meta currently right now, especially given all the amount of room they have to innovate on AI and the fact that they are ready to spend and be a leader in this industry. So exciting stuff. Absolutely exciting stuff for Meta. Now, the only thing we have left is Amazon tomorrow. And Apple. I think Amazon's going to do well. Apple, I don't know. Apple's up a lot. I don't think you could justify the valuation on Apple unless you really believe the iPhone growth is coming. Therefore, I think Tim Cook has to really talk about that iPhone AI consumer use case. I don't think the street wants to sell Apple because they wouldn't have bought it at 170 if they were going to sell it here at 223. I think they believe there's a long-term vision. Amazon has been stuck in a certain range because Bezos has been selling, but 189 on Amazon, if it has a good earnings, operating margins go up, it's hopefully going to break $200. And then we'll be done with the majority of big tech earnings outside of NVIDIA. And I think we'll become relatively unscathed. Outside of that Microsoft drop and the Google drop that recovered, Microsoft recovered pretty much everything. Microsoft now after hours is green. Look at that. Microsoft at 418. NVIDIA is the only one left. And I think NVIDIA is the one we're all the most confident in terms of hitting their numbers. And then we get into the rate cut, hopefully in September, election, and maybe a Santa Claus rally to melt up for the rest of the year. All right. That is it for me. Thank you, everybody, for being here. I'll be back tomorrow morning. I still have another video coming out. I know you guys have probably got tired of me throughout the day, but I still have the daily Palantir video coming out talking about Palantir, and Microsoft. Had to make a video on that. If you guys already heard me talk about it on the streams, you don't have to watch it, but that'll be out in like 20 minutes. And yeah, that's it for me today. Also, tomorrow is the first day of August. So this is the last day of July. So we're officially entering in August. And so we'll get into August. Real quick on earnings tomorrow, and then we'll be done. Earnings tomorrow in the pre-market. Again, I'll be live at 8:45 tomorrow. Pre-market, we have Shell, Ferrari, Moderna. There's a lot. Eaton. Yes, we have Eaton, Toyota, Roblox, Sirius XM. Warren Buffett owns a ton of them. A lot of them tomorrow in the morning. And then after hours, we have Intel, Mercado Libre, Coinbase, DoorDash, MicroStrategy, Snapchat, DraftKings, Apple, Amazon, Twilio, Roku. I mean, tomorrow's going to be crazy, dude. Tomorrow is going to be crazy. Atlassian, it's going to be crazy. So another long day tomorrow morning and then afternoon. And then we'll get a small little break on Friday. All right. That's it for me. Thank you, everybody, for joining. I will see you guys tomorrow at 8:45 a.m. Congrats to all Meta shareholders. Awesome earnings. And we'll be back tomorrow. Thank you, everybody. Have a good one. Good night.